Crypto presents exciting new opportunities for the investment-minded, but it's also volatile and accelerating in complexity. That's why we created Tokenmetrics, an intelligent crypto platform backed by an industry-leading combination of data, AI, and media that feeds optimized portfolios to crypto investors. Featuring Tokenmetrics ratings to help you find the best investment opportunities in real time, an indices page that showcases various model portfolios, and deep insights into price predictions and technical analysis. A dedicated NFT dashboard that evaluates NFT collections and assets by our machine learning algorithm to find the most profitable and secure NFTs across all available blockchains. Plus, with access to Tokenmetrics TV, monitor 24/7 exclusive crypto news and analysis. Whether you're a first-time trader or a seasoned crypto investor, you can stay informed and in control, backed by your all-in-one crypto companion, Tokenmetrics. Take control of crypto today at Token.
All right. Hello, everybody. Hope you had a wonderful Thanksgiving. Obviously, I'm Ian Bellina, founder and CEO of Tokenmetrics, being joined by we have a very big announcement. It's the launch of the TradingView indicator. And as you're aware, there'll be some changes to the Tokenmetrics going forward. So we'll go through and cover those announcements. But let me first pull up my screen here to walk you through the agenda. We'll have this kind of like the old days. So just give me a minute here, a few seconds rather. And let's make this full screen. All right, so this will be a very engaging live stream. So just like the old days, go to menti.com, MENTI.com, and use the code 33497458 to post any questions. We'll have a long AMA, Ask Me Anything, at the end of this live stream. But basically walking you through the agenda. And if it's easier for you, just scan this QR code. All right, so basically menti.com, MENTI.com, enter the code 33497458. But on the agenda for this live stream, we'll go through, do the typical audience welcome. We'll talk about the Black Friday coupon that gives you 40% off of Tokenmetrics. And yes, we'll talk about the resignation of the 3 TM research analysts from Tokenmetrics. And then we'll have Jad do a 15-minute presentation on the launch of the new TradingView indicator for Tokenmetrics. And then we'll have question of the day. We'll go through my market update, giving you my take on the market and also my current portfolio at this point in time. And then the old school AMA is back. All right. So with that being said, Jad, want to do a quick intro on yourself?
Yes, of course. Thanks, Ian. Hi, everyone. Thank you all for being with us today. So I am Jad. I'm the quantitative analyst at Tokenmetrics. And today I'm going to be talking about one of our new products, the TradingView indicator. That works on any cryptocurrency that is on TradingView, and we're going to talk about the differences between the trend following strategy and mean reverting strategy. So I'm very excited to be sharing this new update.
All right, awesome. Okay, so let's go through and do quick shout outs. So first person on the stream, Fares from Montreal. What's up? Bonjour, mon ami. Akin. The notorious Bill. No, unfortunately, Bill is not with us anymore. I'll go into that in the segment. Then let's see here. Easy Eats tuning in from North Carolina. I like North Carolina. I have family down there. Let's see here. Yes, this is definitely different, but hey, change happens. It's crypto winter. It's part of life. Wishing Bill the best. Wishing all the analysts the best, but unfortunately, it's the end. All right, what's up, Pat? Good to have you here. Hey, Philip, good to have you here. Yes, we'll definitely address Bill's absence. I've lost some weight. Yes. Health is wealth. In this bear market, I've been working out a lot. For those who've noticed, I've lost almost 50 pounds. Basically, I can get towards that in the AMA if you guys are curious. All right, so I think with that being said, when am I having a meetup in New York? Not sure. It's getting very cold. I've been between New York City and Austin, Texas, but definitely looking forward to doing a meetup I think maybe that's something we can definitely plan, maybe in December, but December's going to be pretty busy. I will be going to the World Cup. Looking forward to that. As you guys see, I'm repping Brazil. Jad's also really big into soccer. What's your team, Jad, for the World Cup?
So for me, Brazil as well,
Jad?
man. Yesterday they played amazing game, great goals. I really like Brazil.
And that goal, yeah, that last goal was incredible.
Yeah.
Yeah, good old days. Actually, I've not done a crypto world trip to Brazil yet. That's one of the countries I missed back in 2018. All right, so with that being said, let's go to the Black Friday coupon. So, by the way, this is our birthday. Tokenmetrics launched back in 2019, right? So every Black Friday, we basically do, well, every Black Friday all the way till Cyber Monday, but basically all of this week since Monday, we've had this coupon code available, right? So if you go to our website and during checkout, put in the code HBD40 for happy birthday, 40% off, you get 40% off of Tokenmetrics. So this is incredible. I highly encourage you take advantage of this right now, right? And not only that, we also have the TradingView indicator that Jad will cover. And for the first time ever, we're making this a standalone product. So for those of you who maybe want to use just purely the TradingView indicator, you can purchase this purely by itself, without having to have the whole TM platform. But if you're already a customer, we have even better news for you. We're making the TM TradingView indicator available to all customers, basic plan and above, right? So plus you get 40% off, right? So highly encourage you take advantage of that right now, right? So the pricing for the TradingView indicator by itself is basically $20. But if you purchase this annually, you get two and a half months free, essentially, right? Basically, I believe for $150. Then if you add the 40% off, this is a huge steal, right? So we want to make sure we're giving as many people there access to our platform and our technology, and also this new product, right? So highly encourage you to take advantage of this right now. All right. With that being said, let's move on to the next topic. Hold on, sorry. Let me just briefly address what happened with the three analysts. I won't get too much into it. We have already issued an official statement to our customers and our community via email and also on the Tokenmetrics Twitter. But essentially, a project that did not go through the Tokenmetrics research protocol with three analysts on our team who basically had a conflict of interest that was not disclosed. While they disclosed they were holding it, they were not disclosing that they were working with the company directly and being employed by them and owning such a large supply, right? So after beginning a legal investigation, all three analysts have officially resigned from Tokenmetrics and they're not with us anymore, right? So we wish Bill, Noble, Jacob, and Daniel the best with their future endeavors. Bill has already joined GLDN, the cryptocurrency or crypto asset, as their director of research, right? But basically, essentially, that coin should not have been covered by anybody on Tokenmetrics, and we have basically a standard to uphold, right? So we love Bill, wish him the best, but things just could not work out, right? I can cover more towards the AMA, but for now, that's kind of the quick TLDR. So with that being said, let's now pivot to the TradingView indicator, which I'm very excited, happy to have us announce. So Jad, do you want to talk about this?
Yes, sure. Thank you, Ian. I'm just going to share screen. All right. Okay, so I'm very excited to be showing you guys the new product that we've been working on, the Tokenmetrics TradingView indicator. So here on the tokenmetrics.com website, under the pricing page, you can see a bit more details about this indicator. So here, essentially, we are trying to build a strategy, a long, short, or buy-sell strategy that you can apply directly on your TradingView monitor so that you can make better trading and risk management decisions. So I'm going to discuss it more in detail when I show you guys on TradingView, but just as an overview, it's going to be two style of strategies, one that is trend following and one that is mean reverting. and I will discuss a bit the differences between them. But essentially, there are multiple components that we are using on that TradingView indicator. One of them is just an adaptive cloud that is telling you on a relatively short term whether the trend is bullish or bearish. And then another component is a trend line that is more of a long-term analysis of how the trend is changing with time. And then finally, some sort of bands that will tell you resistance and support on the short term. And lastly, the signals on where our model would buy and where our model would sell. So let's go ahead and show you guys on TradingView directly how that will look. So as I mentioned here, you can see I have two different indicators, one that is the Tokenmetrics trend following and one that is the Tokenmetrics mean reverting. So let's start off with trend following. So this is Bitcoin, Bitcoin USD, and I'm going to put in our indicator on it. So you're going to get a visual that looks like this. So as I mentioned to you guys, there are several components. First of all, you can see the green line that moves from green when there's a strong uptrend all the way back to red when there is a downtrend. So this is essentially helping you determine whether the long-term trend is bullish or bearish, so that you can know when to reduce positions and when to go risk on and when to go risk off. And so this would be like a long-term trend, and also it could give you some support levels when there is an exponential trend. Because this sort of trend line is what we call adaptive to volatility. Whenever you see a very strong move and very strong trend, this trend line is going to be adapting to prices very fast. But when you see a period of consolidation where really no big moves is happening in terms of volatility and trend, the trend line will become flat, so that we reduce the false signals that you get when you're applying trend following strategies, and then you are in a range. Because when you are in a range-bound trading, trend following strategies will tend to output false signals. So we use this to reduce the possibility of false signals. And then another thing, which is the blue bands here, that could tell you where on the short term you can expect resistance and where you can expect support. All right, so this is visually how the indicator is going to look. And then another thing is that you can get the short signals in red, and then the long signals in blue, telling you where our model is going long and where our model is going short. Now, another very nice feature that we wanted to provide to you guys is the ability to see how these signals would have performed in the past. So this is the backtest. We want to show you the backtest so for full transparency, but also for you guys to learn when this model is good and when it's not, when it performs well and when it doesn't perform very well. So here, whenever you choose the Tokenmetrics trend following indicator, you will get the long short signals, but also you will get the backtest. So let's talk a little bit about the backtest. So here, just the net profit, as you guys know, it's just the profit that you made by following these signals. And so it gives you the overall performance here in percentage. And then it gives you the number of total trades that were made throughout this time period, the percent profitability or accuracy of these trades, and then the profit factor. And profit factor, usually anything above 1 means that it's a profitable strategy. And then when you get close to 2, it means that it's very, very good. You're making twice as much profit than losses. So anything above 1 is usually pretty good. And then you can look at the average trade and what was the return on the average trade. And obviously, max drawdown is a good metric to understand the overall riskiness of this portfolio. So when you are doing trend following strategies on a daily time frame, and in crypto especially, you can expect max drawdown to be high, especially if you are trying to chase big returns like here. And if you want to reduce your max drawdown, it will also likely reduce the return if you want to be stricter and risk. And you can put in your own stop losses, which will reduce that max drawdown. Now, another very important thing here is that you can click here to see what is the performance of buying and holding this asset in the same time period as this strategy. So in blue here, you see the performance of buy and hold, and in green, you see the performance of our strategy. So here you can clearly see that our strategy on Bitcoin, at least, is outperforming a lot holding. Now, if you want to dive deeper into the results and performances, you can go to the performance summary tab that is here. And when you click on it, it will show you a lot of very useful details. For example, how much money did we make on the long signals and how much money did we make on the short signals? So it divides that up. It tells you the net profit of the strategy, which here is 680%. And then it tells you that, okay, if you bought and held this asset for the same time period, your return would have been 20%. So following this strategy on this coin shows that, okay, we are outperforming a lot holding this asset. And then you can look at a lot of other metrics. For example, how accurate were the long signals compared to how accurate were the short signals, the average return on each trade for each side, and a lot of other useful metrics like what was the largest losing trade and what was the largest winning trade. And then last step of a more in-depth analysis is trade by trade. You can see what were the returns. For example, here you can see that we entered a short position at 40K, which was actually here. And then we closed the short position at 23K, giving us a return of 40 so percent. All right, so let's go back to the overview. So this is for Bitcoin, and that's how visually this indicator is going to look in terms of trend following. One thing I want to mention is that for trend following strategies, and this one, it's best to use daily and weekly timeframes here. Anything below daily becomes very choppy and becomes a high frequency. But here we want to focus more on low frequency trend following. So I would use daily and weekly for this type of indicator. And now let's look at other tokens and how this strategy would have performed. So if we look at Ethereum, profit factor is still 1.2, so that's not bad. We have a 700%, 760% overall performance. Max drawdown is relatively high, so we want to improve that in terms of risk management. But as you can see, we are strongly outperforming holding. The strategy return would have been 766%, and then the buy and hold return would have been about 50%. So we are strongly outperforming holding. Now, one thing to mention is that in TradingView, there's a slight problem with the percentages in terms of short and long because it's taking into account where we start, and we start with $1,000. But at some point we were down $4,000, so it's taking that into the performance summary, which is not correct. And same thing for all the other open trades, and then you can see the list of trades one by one for ETH. So if we go through other examples really quickly, you can see, okay, this is for Polkadot, for example. Let's look at the chart first and then look at the signals. So as you can see for Polkadot, we had a short signal at 37, and then down there at 20, we closed the short but did not go long because we were not able to breach our long-term trend line. So this is why this line is very helpful, because even when you have bear market rallies, it won't always trigger a long signals that might be false. So here we went short essentially Polkadot at 36, and then closed the short at 20, opened it again at 18, and then closed it down at 8. So this is visually how this indicator would look like for Polkadot. And then if we look at the backtest, the accuracy of the trade is very high for Polkadot, it's about 85%, but it's only 7 trades. But overall, we do perform holding. Buy and hold would have given only 14% compared to our strategy, which would have given a lot more, 1,900%. And the longs and shorts have been performing pretty well for this coin. A few other examples before I go towards the mean reverting indicator. So this is for BNB, Binance Coin. We also outperform holding by quite a lot. And now this is a good example. This is for Terra Luna. So as you can see, by following a strategy like this, you could have entered Terra Luna around like below $10, and then here would have been a false signal. The loss would have been pretty minimal. And then here, that one was the big short signal before the big collapse of Terra Luna. So this helps you manage risk better. Of course, there's no strategy that's going to be perfect for all market conditions and all tokens. And that's why we are showing you the backtest, because we want you to look at the backtest and identify if the risks involved with this strategy fits your risk aversion. And if you want to reduce the risk, then we will give you an option to have your own stop losses strategy and where to put your stop losses. All right, so if we go through a couple other examples, so this is for Uniswap. We do outperform quant as well, not bad. We outperform holding. All right, so this was for trend following strategies. And like I said, for this type of strategy, I would usually use daily to weekly. And obviously, I've explained this many times in previous videos. We will do more tutorials and guides because I want to explain very well to you guys what are the pros and cons of trend following strategies compared to mean reversion. Because, like I said, no strategy is perfect. We need to understand exactly what are the risks involved by following the trend or by reverting that trend. All right, so this was for the trend following component of our indicator. Now, we know that a lot of our clients are traders and not really long-term investors. So as a trader, maybe you want to have more high-frequency signals, maybe on an hourly or even on a 30-minute time frame. So we went ahead and developed a strategy for you guys that is that is much more high frequency, and we call it the mean reverting strategy. And I will show you guys here how the signals will get generated. So here I'm using an hourly time frame, and as you can see, you get long and short signals that are in a very high frequency type manner because we're using an hourly chart. So if you look a bit more in detail for Bitcoin, this is the type of signals that you can expect: a short at a relatively local top, and then a long at a bottom, and then short here, long, short, long. So of course, nothing is perfect. We're going to get instances where, for example, we went short at 16.2 and then went long at 16.3. So here we would have had a loss on this specific signal. But that's why we want to show you the percent profitability of or accuracy of these type of strategies. So here I'm looking at an hourly time frame for Bitcoin. Let's hide this. So this would be the equity curve or the performance of this style of strategies with hourly trading. And as you can see here, we have over 400 trades because it's high frequency, and over the 400 we have around 70% accuracy. So that's pretty good. It usually tells you, okay, here's a local top, here's a local bottom, so you can work around with it. One important aspect, actually, I will talk about the size of the trades later on. But here, let's just analyze the type of performances you can expect by following this type of strategy. So obviously, it's a very high frequency. You're going to have a lot of trades. So personally, unless you are spending a lot of time on that screen, or you have low trading fees on your exchanges, these are things you need to consider. Another thing you can do by using this indicator is just analyze where it's outputting a short and long signal. So that gives you a better idea on how to fix your positions. But overall, on an hourly time frame, you can see that the equity curve is pretty good. Max drawdown is only 2%, and the net profit is around 9%. So relatively, for a high frequency strategy, the performance is pretty good. And then we can see more into detail. If you were bought and held this coin at the same time we started the strategy, the coin would have been down 45%, but our strategy would have been up 9% without taking too much risk. As you can see here, the max drawdown is only 2%. So for this specific case, it was a very low risk and not bad
That's
return.
pretty good.
Yeah, it's for 10% return and only 2% drawdown, while holding the coin would have been
I think the thing you have to kind of, so I mean, like in a bear market, just kind of chime in briefly. The key thing is to preserve capital, right? Warren Buffett for value investors says, first rule of making money or investing, don't lose money. All right. Rule number 2, don't. You made what, 9%? Relative to that, that's pretty damn good.
Yeah, especially if you look at if you were just along the token, as you can see here, our performance was much better than just holding. And that is also similar to other tokens. Now here, the profit factor is 1.4, which is really good. On other tokens, it might be less. For example, here it's 1.17. It's still relatively good. The percent accuracy is still pretty high, and max drawdown is pretty low. And then similarly, we can try this for a bunch of other tokens as well. Now, one thing I want to mention. So since this is a high frequency strategy, we also want to give you guys the ability to do some changes so that you can fit the strategy to your own risk aversion. Because maybe whoever developed the strategy or me likes to take more risk. So I want my stop losses to be big. But what if it doesn't fit your risk aversion, and we want your strategy to fit your preferences? So you have the ability to do some changes here, which we will discuss a lot more later on. Now, one thing I want to mention is that you can also change the order size. So for example, here I'm saying that whenever I get a long signal, I want to invest my entire capital, and whenever I get a sell signal, I would sell everything. But we can change this. You can say that I want to invest 10% of my capital for each signal that I get. And then in that case, you can really see that you can improve your strategy a lot by just changing the bet sizing strategy. So instead of going all in on the first signal and all out on the one signal, you can choose, I will start investing 10% of my capital on the first signal, like here, and then 10% here, 10% here, 10% here. And that overall can really drastically improve the performance of your strategies. For example, here, if we look at this strategy, we do 28% return with only 3% drawdown, while holding would have been down about 44%. All right, so this is how essentially it's going to look like. So as I mentioned, you have the trend following indicator for daily and weekly. And then we have the mean reverting indicator for hourly to 2 minutes. So I'm going to show you guys, this was for hourly. We did this performance for hourly. Now, what if I want to be even more in depth? Let's try 30 minutes. So even 30 minutes, you have a pretty good percent accuracy. The returns are a bit lower when you go a lower time frame because you're trading a lot. But as long as our profit factor is good, is above 1, then that is good. But yeah, for me, I like to use this on an hourly basis, because if I'm using it on 15 minutes, it's going to trade a lot, and then you need to take into account trading costs and all that. All right, and so this is the mean reverting aspect, and as I mentioned, we're going to do more videos and more articles on what are the pros and cons of these indicators, because I want to show you clearly that nothing is fully perfect for all market conditions. As you can see here, we got in a long signal on the mean reverting chart, but then when we had that breakout, it wasn't very good at adapting to that. So every strategy has pros and also has some cons. So I want you guys to be aware of all of that so that you can use it much better. All right, I think that's all I have in terms of presentation for TradingView indicator. Ian, I think we can go back to you. Let me change this, go back here, and then do daily.
You're on mute, Ian.
I'm sorry, guys. Thank you, Jad. Pleasure to have you. I think the trading indicator is great for our audience. And as mentioned, you can get this as a standalone product by itself, or if you like, this is part of all Tokenmetrics plans, basic plan and above, right? So pricing for that, let me actually pull up the pricing page. Basically, if you go to Tokenmetrics products, TradingView indicator, that's where it is, right? So this is basically being rolled out today and all the way through the weekend. But basically, this is something we think will give you access to our signals and indicators off of the platform, right? So as we know, lots of traders out there love to use TradingView. So now you can take our technology, plug it into TradingView, and use it on crypto assets, right? So whether it's Bitcoin or some altcoin or whatever, we help you save money and avoid taking a huge L, right? That's kind of the goal, especially in times like this. So with that being said, thank you, Jad. And once again, the code for the 40% off is HBD40, right? Happy birthday 40, right? HBD40, 40% off on all products, whether Tokenmetrics is a platform or TM TradingView, it's indicators. With that being said, thank you, Jad. Have a good weekend.
Thank you, guys. Pleasure to be here. And like I said, we're going to be doing a lot of guides and tutorials to give you more information about how to use it and the pros and cons and so on. So thank you, Ian. Have a great weekend and see you all next week.
All right. I'm sorry, a quick correction. It's actually under the pricing page. So just go to Tokenmetrics, pricing, TradingView indicator, buy the indicator. And then just put in the code HBD40 for 40% off, right? So let us know what you think. We always welcome feedback. Always want to make sure we're building a great product. All right, so let's move on to the next one. And once again, go to menti.com. That's MENTI.com and use the code 33497458. And we'll use that to basically answer questions and curate questions for the AMA. All right, so let's go to question of the day. This is an old school segment that's back. All right, so question of the day. What percentage of your portfolio is in stable coins? What do you think? Is it 25%? Is it 0%, 50%, 75%, 100%? What percentage of your portfolio is in stable coins? All right. So me, actually, what percentage of my portfolio is in stable coins? I would say it's probably, I'll probably also say about 25%. And actually, no, I'm sorry. I would say, well, 25% stable coins and 50% or more is in cash. I definitely cashed out, but I'll cover this towards the end when I cover my updated portfolio. And I'm basically out of the market, right? For the most part. The only things I have in the market really, which I'll cover, I have some ETH, some AVAX, some HNT, Helium, that's being staked, some Polygon that's being staked. But for the most part, that's pretty much it. I'm basically in cash, some stables, but once I heard about the whole DCG Grayscale going bankrupt, I was not going to risk my capital in the market, right? Then I'm also a partner of TM Ventures, Tokenmetrics Ventures, and I also have my own capital inside the fund, right? So I already have exposure to crypto through the fund itself, so didn't really need additional exposure on the market with all these different collapses, right? We had FTX, 3 Hours Capital, Celsius, BlockFi, Terra Luna, UST. So pretty much we're dodging bullets left and right. And cash is king. Cash is king. In times like this, you have to really make sure you preserve capital, right? So with that being said, looks like the winner is 25%. Most people have a quarter to half of the portfolio in stablecoins. I think that's decent. I think that's a good start, but honestly, I think that's too low, right? Unless you're also counting cash like I am. If it's just purely crypto, because the market has been getting wrecked. People have been getting devastated, getting hit, how do you preserve capital? Cash is king, right? So the whole point with our TradingView indicators and also with our indices, which unfortunately did get wrecked with the whole FTX collapse, especially the weekly, right? Because those couldn't really adapt, right? The whole market just tanked 40% essentially in one day, right? But I think in times like this, where there's just so much uncertainty in the market, you have to really preserve capital, right? So for me, if we say, okay, stablecoins and cash, how much of your portfolio is in that? I think a good portion would be 25% or more, right? Because even our indices, for the most part, 3/4 of them were in stablecoins, right? But even that still gets you wrecked, right? But in times like this, you want to be preserving capital, right? So I definitely understand people wanting to preserve capital. Yeah, so I would say please submit most of your questions to the Mentimeter. That way the whole community can vote on them and we can answer them. All right. Okay, moving on to the next part. Okay, my market update. So I'm going to give you my state of the market, where I think the market is, how I'm handling this, how we're handling this, and just basically be fully as transparent as possible, right? So I'm actually going to start with Tokenmetrics. If you go to our platform, if we go to the market page, so basically just analytics market, this page was designed to give you the lay of the land, what's currently happening in crypto. And I'm going to give you how I would read this, right? So basically, we had our signals here turned bullish on 3rd of November or 4th of November, right? Then ended up being a false signal. Basically, the whole FTX, BCG, whatever, basically the whole market sentiment shifted. And that was a false signal. Went back to being bearish on the 8th of November. And it's been bearish ever since then. And so basically, ever since then, it's risk off, right? So in when it comes to investing, you have risk on, risk off, right? Risk on, you can be aggressive and go out there and aggressively seek a good return, right? When it's risk off, things become bearish. Your whole premise is to preserve capital, right? So you shift most of your portfolio to stable coins, cash. You might have some money still in the market, and that out of that, maybe you're doing mainly shorts or you're hedging, but it's a risk off environment, right? So since the 8th of November, we've been purely risk off. This is the way I would read this. And basically a bear market, right? So 14% of the market is bearish based on this gauge. Now, when we compare our trend indicators, right, from a bullish and bearish breakout strategy, 13% are bullish, 14.7% are bullish, right? So basically, we're in risk-off environment. Now's not really the time to be in the market, right? And if we go to total crypto market cap, looking at this, right, bear market since then. And one of my favorites here, the Bitcoin and altcoin season indicator, right? We're not in alt season, right? Altcoin season is really where the money is made, right? It's where you get those 20x to 100x to 1000x returns in crypto, right? Which is why I think a good portion of us are here. We're here to make life-changing money. But right now, that's not happening. Right now, if anything, it's Bitcoin season, right? Bitcoin season is typically king in a bear market. And looking at this, right, we have the volatility changing. We have different sectors, right? Most sectors are also negative, right? Think of this as narratives in crypto, right? Right now, the hot narrative in this bear market is really derivatives, right? Whether it's GMX, Ribbon Finance, gains, that seems to be where most people are flowing, right? Why is that? Maybe because people are hedging or looking to short the market in a bear market, right? So I think derivatives could potentially be one of the few plays out there in a market like this. But even now, I still think it's a risk-off environment, right? But I think I can see why derivatives would be doing pretty well relative to every other part of the market. And looking at this, not sure why Voyager is up a lot. It's up 8%. Not sure about that. I mean, because they went bankrupt. Then looking at it, Celsius is down. Shocker there. But basically, just looking at this, we're in a risk-off environment. But now let's kind of shift to my point of view, right? So first of all, if you're still around right now, first of all, clap yourself on the back. Now's really a sure time to still be in crypto, but to not have capital in crypto, right? you want to still be following the market, following what's happening, right? Because the people who leave crypto and come back in a bull run, they end up buying the top. You don't want to be one of those people. You want to buy low, sell high. How do you know when to buy low? You have to keep your pulse on the market, right? So the way I view it is this: we've had numerous black swan events happen, right? So we've had to dodge so many bullets. We're basically just tap dancing, right? We had to dodge Celsius. We had UST and Luna. We had 3 Hours Capital. We had FTX. And now we have Genesis Trading and DCG coming up, right? So those are 7 events, 7 collapses, right? So if you're still here, if you're able to preserve capital through those 7 black swan events, that's incredible. That's the name of the game, right? So that's what it's about. It's about preserving capital in times like this, right? Cash is king, right? So this is why we built Tokenmetrics, right? So obviously, nobody's perfect. We won't be perfect. But if you can avoid all those collapses, right? To me, that's what it's about. Because once you have that capital, once the smoke is cleared, once it's back to a bullish environment and it's risk on, you still have your capital. You can invest or trade. But if you have lost all your money, then it sucks, right? You basically you have to restart all over again, right? And that's what you want to avoid, right? So anybody can make money in a bull market, but it's hard to keep money in a bear market, right? And that's what our product is designed to help you with. It's designed to help you mitigate as many risks as possible and preserve capital for the future, so that when it's back to being a risk-on environment, then you can invest or trade. Okay, so now looking forward, right now we're in Q4. Where's this going? All right, so for me, I'm more of a value investor, for those who have not followed me for a while. And one of my favorite books and favorite value investors is Howard Marks, right? The book I like by him is there's one called Mastering the Market Cycle. And what is the other book by him? I should know this one. They're basically all his books I highly recommend. But basically, in theory, macro does not matter. It might sound kind of counterintuitive, but for me as a value investor, macro does not matter, right? Macro is more for traders. If you're a trader, that makes sense. But if you have the premise that you're looking for value, you can find value anywhere in any market cycle, whether a bull market or a bear market. It just depends where you look, right? Now, I know crypto has been really correlated with legacy markets, with stocks, equities, commodities, whatever. That might be true, but you can still find value, right? Whether it's in venture capital investing, whether it's in the NFT market, whether it's in other spaces, you can still find value, right? So if you have the narrative that the macro is controlling you finding value, you'll never find value, right? Because the Fed the Fed won't control me finding the next 100x, right? That could be true from a trading perspective, but if a new product launches and it's an airdrop or it's mining, for example, you guys know I'm bullish on HiveMapper, right? I've pre-ordered 2 devices. That could be some alpha. Now, that doesn't mean go out there and buy it on exchanges. That's trading it. But if you buy their device and you're driving around anyway, and you can earn tokens from just driving, if you're taking road trips, that's the way to make alpha, right? Helium launched in a bear market. Polygon, Matic Network launched in a bear market. So lots of projects can launch in a bear market, and you can still find alpha. But if you're out of the market thinking because of the Fed interest rates is messing up your alpha, that will blind you from lots of opportunities in the space, right? So, I mean, when do I think the market will shift to being risk on? Honestly, it's hard to say. I think, honestly, nobody knows. Q1, Q2, who knows, right? People have attempted to predict this. It never happens, right? But if anything, I would say keep your pulse on the market, stay in the game in terms of following crypto, but you don't have to have all your capital in the market, right? Basically, I think you have to follow the pulse to know what are the potential risks, right? Because if you don't have your pulse in the market, you wouldn't have gotten out of FTX, Celsius, and all these other black swan events on time, right? So for instance, we were able to warn our customers about FTX the weekend before it happened, right? Because we basically went bankrupt on Monday or Tuesday, but we rumors came out Friday and Saturday on crypto Twitter, on Telegram groups. We did our research, saw the analysis, and said, you know what, get out, right? We said get out of the whole market. We went straight to cash. And then same thing with Celsius, right? And now we're hearing rumors with DCG, Digital Currency Group, and Genesis Trading. And basically the rumors were that they're going insolvent. And this could be a big collapse. But you have to really be paranoid. Only the paranoid survive in times like this. What does that mean? So when you hear a rumor and you see smoke, you get out, because we're in a risk-off environment. You cannot have any risk, right? Because where there's smoke, there's fire, typically, in times like this. What does that mean? So there were rumors on Twitter that DCG, Genesis Capital, were going bankrupt, but there are also rumors that Signature Bank, Silvergate Bank, which is a huge banking provider for crypto exchanges and crypto companies, was also possibly insolvent because they had exposure to FTX and Alameda. And then from that, there are also rumors that Circle, USDC, could potentially have issues because they had exposure to that bank as well. So our team said, and myself, we said, you know what, we're getting out of USDC. We're not going to be anywhere close to it. We're going to get out of it. We basically want to cash to the hard US dollar, right? That, and basically some Tether, even though it's had its FUD, its rumors in the past, the rumors were not as much as USDC at that point in time. Then you also had DAI. I would not put money in DAI. DAI used to be a good stablecoin. It was decentralized, but now basically 2/3 of DAI is USDC, right? And DAI and USDC and Coinbase are kind of playing lots of funny games, right? USDC is owned by Circle and Coinbase. And if you know what happened is basically USDC, Coinbase voted to put to take the reserves from DAI and put that into Coinbase custody. But if you notice, Coinbase is not a decentralized company or platform, right? It's not decentralized. What does that mean? So kind of like Celsius and FTX, if they go under, right, the assets that came from the DAI treasury, the decentralized owners of that become creditors to Coinbase, right? You can't get your funds back, basically. So why custody treasury of a decentralized protocol? That made no sense. All right, so anyway, with that being said, that's kind of my take on the market. I know I've kind of been rambling. Let me check the comments and see how we're doing. All right, so let's see here. Yeah, let me know what you guys think. Yeah, so any AMAs, I'll answer AMAs directly on the Mentimeter, right? So let's use that to submit questions. Yeah, it's great to be back, right? Apologies, I had to kind of outsource this, but here we are, right? Here we are, and we're going to be here, and we're going to look for that alpha. Yeah, I've been watching Mark Moss's videos. He's been doing great videos, great content. I met him once, I think back in 2019 at BTC Miami. All right, so that's my market update. Let's go to my current portfolio. So this I'm just going to kind of speak to. Let me just pull this up. Now, if you go to tokenmetrics.com/disclosures, we have all the disclosures for the team's holdings. And now we'll also have the exact quantity we're holding. So we'll be updating that. I would say probably about every 2 to 3 months, about every quarter. Let me see here. Give me 1 minute to pull this up. Okay, all right. So what am I holding? So I have Ethereum, I have Tether, I have Astra, DAO, I have Olympus DAO. I still have that. I sold most of it, but I still have it some amount. I have Helium. I'm still staking that, but I'm actually thinking of unstaking it. But it's just
Jan, you're sharing the wrong screen.
I'm not. There's not. I have you got I still have some events to go. And then the most part, I basically put most of my capital in PNB, my mutual fund. Now it's distributed to the money, the manipulation. And then I have some people that I just use as well. And then I also have a account allocation for the fund, right? And then now it's not forgetting capital, right? So hopefully we'll be updating everything more. In the future. We want to get to the area now. Okay, all right, here we go. Ask me anything. Once again, if you want to go and hold on, let me just. Okay, so yeah, so first question. Hello, Ian. Okay, hold on. People are saying audio is bad. I cannot share what happened with the audio. Let me get closer. Is this better?
Yes.
Is audio better?
Yes, it's better now.
Okay, just
Yes.
keep. Yeah. Let me know. Let me know in the chat if the audio is going on. Let me see if I can.
No, it was fine. Then
So,
again, it went bad.
Let's
It was
see
fine.
here. Alright, so first question. Hello, Ian. Do you think US president will define that distinction after the industry
No.
shift more towards privacy
Yeah, this is
or registered security tokens in either case? Okay, so it looks like this audio is working for some people, but not for everybody. I'm not sure what's going on. I sound underwater. Okay, how about this, guys? Let me just let's take a quick break and let's take care of this. All right, this audio. All right, I'll be back.
Crypto presents exciting new opportunities for the investment-minded, but it's also volatile and accelerating in complexity. That's why we created Tokenmetrics, an intelligent crypto platform backed by an industry-leading combination of data, AI, and media that feeds optimized portfolios to crypto investors. Featuring Tokenmetrics ratings to help you find the best investment opportunities in real time, an indices page that showcases various model portfolios, and deep insights into price predictions and technical analysis. A dedicated NFT dashboard that evaluates NFT collections and assets by our machine learning algorithm to find the most profitable and secure NFTs across all available blockchains. Plus, with access to Tokenmetrics TV, monitor 24/7 exclusive crypto news and analysis. Whether you're a first-time trader or a seasoned crypto investor, You can stay informed and in control.
Hey guys, can you hear me now? Let me know if this is better. We got two options on this setting app we're doing. So it's good? All good? All right. That's what I like to hear. Okay, all right. So, please stop the shelling of GDN, because I don't think you guys want to come to your funeral. All right. Okay, so where were we? Okay, so back to the question. Ask me anything. Hello, Ian. Do you think U.S. government will kill DeFi with bad legislation after the FTX disaster? Does the industry and total value locked shift more towards privacy or registered security tokens in the case? Oh, I think that's a tough question. Honestly, the way things are going right now, with the whole FTX collapse and insolvency, and the way, and basically how much he has greased politicians and regulators, to a point people are talking about him. I mean, basically, he's donated $40 million to Democrats, but more than that, he's basically donating across the aisle to nonprofits, all these different media companies he basically owns, right? New York Times, Washington Post, all these companies are just fluffing him up. They're trying to change the narrative that basically this was not fraud. This was pure fraud, in my opinion, right? But he's a media link. I never got into the whole effective altruism BS, because first of all, it doesn't really exist, right? For those who kind of follow philosophy, right? I'm big into Ayn Rand and rational interest. So when I heard the whole concept of effective altruism, that basically you're going to become a billionaire and give all this away, to me that just seemed like a Ponzi. It just seemed like a finesse, so to speak, right? I never really bought it, but I said, okay, whatever. But after he later admitted that basically all this was just him saying a whole bunch of stuff to really get as much money as possible. He played the narratives right. He saw people like vegan, people like effective altruism, people like X, Y, and Z. Then he found all these companies and gave them donations, grants, and now basically the press loves him because he owns the press, right? So I mean, honestly, it was a pretty wise move, but it's pretty psychopathic, right? But now regulators really are in his pockets. He was literally meeting with Gary Gensler and the SEC, CFTC, and he hired their old buddies. So he had all the connections. So the fact that they're not going to kill his bill, they're going to keep it moving, is very, very scary. It is very concerning, to a point that if crypto gets killed like this, we may have to go outside the US for crypto, right? Which sucks. But if that's where things are going, is the stream still going on? Right? Are we having issues with the stream, guys? All right. Apologies, everybody. We're doing this right after Thanksgiving, as we're traveling. right, let me know about the Wi-Fi, guys. Yeah, this stream is not working, guys, unfortunately. Not sure if it's my end or the producer's end, but we're gonna have to maybe do this a different time. Definitely apologize. Here, just give us 1 second. Okay, audio is good, but the video is not good. Okay, so we're back now. Okay, audio only. Yeah, okay, all right. So it looks like. Okay, so here, let's just turn video off and just do audio, right? If that's working. So just put up the screen and I'll just talk. All right, so basically, going back to what I said, he basically owns regulators, and crypto now, I believe, is going to be sent overseas. Right? Could you pull up the screen, Gaurav?
Not sharing screen.
My screen?
You're not sharing screen. Yeah. Please share screen.
Like the Ask Me Anything screen. Or it stopped? Oh, okay, all right.
You are not sharing screen.
Apologies. Okay, there we go. How about now? Okay. All right, yeah, so basically, maybe I tried this with video again. If this is not working, then we can figure this out. But basically, crypto, the fact that they're still doing the bill is what scares me. Right? Somebody has to kill that bill. Right? That means having to change politicians, change presidents, or whatever, right? I think the way I view crypto now is, if you want the future of crypto to survive, you have to be a one single issue voter, right? Crypto or nothing. Like for me, that's going to determine whoever I vote for, right? In any election. But what scares me is if they literally try to kill crypto. I mean, I may have to go overseas, right? But I don't want to. I want to stay here, right? But if they ban crypto, literally, what are you going to do, right? Just find some other industry? But anyway, the other part of the question is, does the industry and TVL shift more towards privacy? Privacy, yes, but they'll always play whack-a-mole and try to find ways to make it tougher, right? To do crypto here in the US. And security tokens, I had a video on this back in 2019, but they haven't really gone anywhere, right? Because people don't really, there's no liquidity, there's no infrastructure yet for all that. There was like, T0 platform and Polymath or Polychain something, but all that has not taken off. What took off was DeFi. And especially now, after people have gotten wrecked from centralized entities, people want everything to be purely decentralized. So for that to happen, how do regulators regulate that? They don't. We need new regulation. I know our friend Ben Armstrong, Bitboy Crypto, is working on a bill that will make crypto friendlier in the US. I definitely prefer that over the SBF bill. But basically, my take on it is it's not looking good for crypto. I think long term, we have to be ready for a long bear market. I'm talking like 3 years or longer. Because think about it, public trust in crypto is decimated. Decimated, right? This is similar to how people got wrecked with Mt. Gox and had to just get out of crypto. And really, there was really not much action till like 2017, 2018. So the question is, now you had who was in the spotlight. for the trust to come up, right? Because I think it might take that long, maybe even longer. Who knows, right? Because this was a huge collapse, in my opinion. So the public trust is what concerns me the most. Because crypto can go up and down. Who cares, right? That happens all the time. That's a weak in crypto. But the public trust, and for a company so public that was valued at 32 billion to collapse that drastically overnight, I mean, how do you get? I guess question of the week is, how was your Thanksgiving dinner? All right, versus last year when crypto, right, and this year after all these events, right? How do you get new people in crypto after everything that has happened now? They'll be more skeptical. So anyway, that's my ramble. All right, so yeah, apologies for the stream quality, guys. I'll be back home, so I can with my regular connection, and then we'll see how we can handle this as we travel. Actually, yeah, let me take off the video again and see if that helps. Okay, so next question: are we going to follow the 4-year cycle again, just with an echo bubble this time, like 2019? Well, that's kind of what I just talked about, right? I think be ready for something even longer, right? Plan for the worst, basically, right? So, because last cycle, the bull run was what? Let's say, like, some people say parts of 2016, but let's say 2017, 2018, right? It basically ended Q2, spring of 2018 is when the bull run ended. Now, people were still making money in a bear market, right? As I mentioned before earlier, you can always find value and alpha in a bear market. But then we didn't really see anything in terms of a bull run until the first DeFi summer, in my opinion. Well, actually, no. We had Launchpad season, right? Basically, when Binance Launchpad was launching all these different, basically IDOs, right? That was a blip on the radar for, like, let's say, like 3 months, maybe 6, right? Where basically exchange tokens did well. BNB did very, very well in a bear market. You also had Synthetics, SNX did very well in a bear market because they basically innovated with basically staking. I guess, was it staking or yield farming? Kind of like staking and yield farming. But from that, we had DeFi summer, right? And basically everyone was launching their own food coins, right? Then you had Sushi Swap and all that, and those meme coins. Then we had NFT season. We had DeFi summer 2.0, right? So basically, crypto became all about narratives, right? So you can still find value, but in terms of people, I mean, it's not really a specific time frame. It's just what is the narrative. So that's why I don't think macro to me matters so much. If you're thinking long term, I'm thinking more so the public trust has been decimated, right? So where do new buyers come in? Right? Because total crypto market cap has been wrecked. Right? It's now under $1 trillion. If we're to go to 5 trillion, 10 trillion, how do new buyers come in after such a public collapse? So until that public sentiment has healed, until it's gone through therapy and can come back in crypto again, it's going to be a long winter, right? But we can be here. The two main things: 1, preserve capital; 2, find alpha, right? You can still make money in a bear market, right? So that's why I don't think the macro matters so much. Okay, so is Solana the new EOS? Or will it still be a top protocol in 2 years? Very good question. Very good question. Potentially, right? I mean, there've been some FUD and rumors about this because Solana and EOS were both led by Multicoin Capital as the lead investors, right? They basically kind of promoted them or shilled them, and both of them kind of collapsed, right? EOS is now basically out of the picture, right? But now, if we're talking about, like, let me actually let me pull up EOS. Right, but EOS, I haven't really heard much about this. I did hear one of the founders of EOS bought some company, but they're under $1 billion market, right? And launched a new token details page on Tokenmetrics. Not sure if you guys have noticed. This is live as of today. We combined all the charts into one super chart to make it easy for you. So basically, we have our TM grade, the EOS price, and our trends indicator. Right. So right now, this is basically bearish. Right. So we have that, and we also have now. We're back to having two grades to make it easier. So we have a trader grade, which is more short term, and we have an investor grade, which is more long term. But anyway, EOS. So let's actually go to DeFi Llama. Because if you look at the total TVL for Solana, it is getting hit. So where is this? I've not used this site in a while. But I want ecosystems. Okay, hold on. Actually, give me 1 second. Just give me 1 second here, guys. Let me pull something up. Okay, all right. There we go. All right. Are you seeing my screen, Grav? All right, there we go. Okay, yeah, so basically, we're looking at total value locked on all chains. Now, this is not really the best metric to use. It's a vanity metric, in my opinion, but it still kind of gets the picture, right? Kind of gives you an idea, right? So basically, 2/3 of TVL right now is on Ethereum. We have about 1/10 on BSC, 1/10 on Tron, surprisingly, but that's just, I would just ignore that, right? There's not really much activity. It's just a bunch of whales on there trying to make it look sexy, right? But look at this. Solana, fall from grace, right? They have 90 protocols, according to this, with a TVL under 300 million, 282 million TVL. Think about that. DeFi chain. Who's heard of DeFi chain with 2 protocols has more TVL than Solana? Phantom, Chronos, Optimism, Avalanche, Arbitrum, right? Solana got wrecked, right? Multicoin's fund is down, almost 60%. And basically, let's kind of walk through Solana on Tokenmetrics. Right, so they're down 55% in the last 30 days. Let me actually zoom into the last 1 month and just kind of see how everything played out. Yeah, so basically the price was at 37th on the 5th of November. Our grade turned, so basically at $29 is when the grade was over 80. When it goes over 80, it's time to get out, right? And basically, overnight, it went to 32. So basically at 24 bucks, it got out. And now it's at 15. All the way to, basically 14 bucks. All right, but basically this was the time to get out. If you still had Solana in your portfolio, right? But is this the next EOS? I think in crypto, anything's possible, right? So now we thought we missed Solana because our blockchain engineer did a code review on it and said the security was horrible, right? Horrible. Well, actually, not horrible, I'm sorry. But the score it received was a 70 or 70 something, and he's concerned with security. Now, that's turned out to be true. Their chain has been paused so many times. Now, while the developer ecosystem is growing, and we are still bullish on Sol, we do still have this as a holding with TM Ventures, but I think right now Solana could go lower, right? Because think about this: there's lots of pressure, right? Because FTX Ventures, Alameda Research had a huge position in Sol. So if they go through bankruptcy, they might be forced sellers of Sol. Right? And they had a huge amount. I think they had, what, almost 10%? I'm not sure if that's correct, but somebody correct me if I'm wrong. But I think when I was going through Twitter, it was like 10% of the supply at one point. So basically, a lot of whales will become forced sellers of Sol, like they already have. And I think just because of that, you gotta really not need to get out, but if you want to preserve capital, I would get out, right? But basically, so to answer your question, is Solana the new EOS? I think it's better than EOS in terms of developer ecosystem. I went to Breakpoint 2 years ago, didn't go this year or last month. Basically happens in crypto where the whole market just pumps back up again. But I think they'll still be around in 4 to 5 years. But will they be the #1 protocol? That remains to be seen, because looking at this, because you have the Ethereum ecosystem, then if you add in Arbitrum, Avalanche and their EVMs, but it's a separate chain, Optimism, Polygon, they have competition, right? Then you have all these other different chains launching, Aptos, Sui. How do they keep up with that, right? Especially if they're getting decimated, right? So I'm not saying it's the end, but I'm saying be careful. Okay, next question. What narratives do you think will maximize returns next cycle? Next cycle. You never know, but viewers do love to speculate in terms of the big narratives. I guess it depends when you define next cycle, because it could start whenever. But I'll just tell you the narratives I think are good to watch for. 1, interoperability. Our team is very, very bullish on the Cosmo ecosystem. We were down there. Well, not me personally, but one of our partners, Diego, was down there at Cosmoverse and also Ugo. And we think Cosmo ecosystem is very, very undervalued. If we actually come here to the chains, yeah, Cosmos is not even... Do they have Cosmos on here? Who the heck is it? I'm not sure why I'm not seeing it. Cosmos. But anyway, the Cosmos ecosystem, in my opinion, is worth watching. Right? So if I'll just click here. Right? So in terms of Cosmos, right? Cosmos and Cosmo interoperability. I think those are two themes, right? Cosmos is one we're bullish on. We've begun investing in via the fund into different Cosmo projects. One project that we actually like, this was an L1 in the Cosmo ecosystem, Canto. It's basically an Ethereum EVM on Cosmo. Juno, we also like. Osmosis, we like as well. Secret Network, we've always liked. Civ Chain, we liked this in the past, but it hasn't really taken off. Evmos we've been looking at, but we haven't really pulled the trigger on that. But yeah, I think those are worth looking into. L2s, EVM L2s, obviously that's a hot space. So Arbitrum, Optimism, definitely worth watching. Near, when it comes to Polkadot, basically Moonbeam. Moonbeam and the integration with Polkadot and also Cosmos. But in terms of narratives, I think interoperability, basically what blockchains connect all the blockchains. Whoever wins that's going to be a big narrative, right? So you have that. We've covered lots of these different projects that kind of do that. It's a very crowded space, but nobody has really taken off, right? So I think so. Basically, L2, Ethereum L2. Interoperability, the Cosmos ecosystem is one narrative. So kind of like how you had the whole Solana. I mean, our team is thinking and also betting that next cycle, the next cell could be the Cosmos ecosystem, right? Obviously, this is just our opinion, but that's a narrative I think worth watching. And then once there's enough liquidity across these interoperable chains, then I think you'll have DeFi all over again. You'll have NFTs all over again. But then you also have other innovative things to look at. For instance, surprisingly, I read the white paper this week on the Curve team's new algo, AMM stablecoin. Yes, I know, right? Surprisingly, an algo stablecoin. But it was actually a very good stablecoin, right? We're still doing research on this. We're probably going to do a code review on this for our customers. But why it's different and innovative is that why I think this is innovative is because this is a real-time partial liquidation stablecoin, right? So they're basically an AMM, right? So you know how DeFi summer began with basically Uniswap V2, right? And then Sushi, but basically began with Uniswap V2 and their AMM. They took an innovation from Banco network or protocol in terms of the AMM, the automated market making whatever, that basically lets you create liquidity via liquidity pools. Uniswap then innovated against that and let you do that with basically all kinds of tokens. It basically became a free for all. And then that innovation led to other things, right? Curve took that and made it available for stablecoins, where you could sell, because they had a different curve for the AMM for stablecoins that was more efficient. So they're taking that same concept and now innovating against that in terms of liquidations, right? Because when it comes to borrowing and lending with stablecoins, you typically have to basically when there's a margin call, you get liquidated, right? If the price of ETH goes down 40%, you get liquidated, right? For example, on Aave or whatever you use. With this is innovative in my opinion because it's a real-time partial liquidation, right? So let's say the price of Ethereum is $1,000, right? And it goes to 900, right? It will liquidate just enough to keep you out of the margin call, right? And it does it via an AMM. So I think this is very, very innovative, worth looking into. I shared this in the Astrobot Alpha group and also in the private alerts for Tokenmetrics for our customers. Definitely go. I suggest you go through and read it, because in this space, in times like this, when everything's down, now's the best time to actually read white papers, right? Because you can find the next narrative before it happens. And I think this could be it. I mean, imagine this changes the whole DeFi and we get DeFi 3.0, right? This could be the kickstart of that, potentially, right? But you find out by reading white papers with innovative technology. So I highly recommend you check that out. All right, so what are you seeing devs most excited about in conferences besides ZK? Okay, that's a tough question. Well, I kind of mentioned that. I think Cosmos ecosystem, Cosmoverse, we're seeing lots of developers go to that ecosystem and migrate over, right? Because basically you had Ethereum, you had basically if we go back to this DeFi tab protocols. Yeah, I don't want chains. I want dexes. Where are dex? Categories. Yeah, so basically DYDX was an Ethereum darling, and they're migrating over to Cosmos. Right? That was a huge, okay, what's happening with Cosmos? Then you kind of had Osmosis DEX and all these other things kind of take off on Cosmos and the whole ecosystem, and people beginning to farm airdrops on Cosmos by holding Atom. But we're seeing lots of developer talent go to that ecosystem, right? So that's one. Then lots of developers in that ecosystem are trying to bridge into Polkadot with Moonbeam, right? So that was also very interesting, right? Made us more bullish on Moonbeam. Pretty much every project building on Cosmos had some kind of integration to Moonbeam. Right? That's kind of the bridge. So it's kind of like you have these different, you have Polkadot and Cosmos bridging each other. You have these interchains creating this super internet, right? So that's basically what's going on, right? So basically Moonbeam, Cosmos, what else are developers talking about? I mean, ZK and L2s of course, Ethereum L2s. And I think that's about it that I've been seeing at the moment. Okay, hold on, guys. Just give me 1 minute here. I'm being pinged. Okay, all right. Can we get some moderators in the chat? Because we have way too many people. All right. So, answer that question. Will NFTs ever make a comeback? Or will they have to provide better utility than just a picture? I definitely think they'll make a comeback. But I mean, this happens. Markets move in cycles. You had DeFi summer, then it dumped, right? DeFi summer basically began with, you had Uniswap, V2. You also had Yearn Finance, YFI, with Andre Cronje. That crashed. Then you have to wait for new innovations. So the new innovation was basically Ohm, right? With Olympus DAO. That was DeFi 2, right? Then you had Time Wonderland and all that. Then that crashed. So now you have to wait for a new technological innovation to have DeFi 3. So same thing with NFTs. We actually had maybe two NFT summers. It kind of depends who you ask, but I would say one real one that went mainstream. The first one was basically you had crypto kitties and everything back in the day. Yeah, also, I guess you could technically say that was, but anyway, CryptoKitties. Then you had NFT 2.0 innovation with ERC, with a new NFT standard. Then you had basically Bored Apes. You had Ether Rocks, and now there's really no innovation in the NFT space. So you have to wait until there's a new innovation. All right, so what's the big innovation? I think once we're able to connect, I think NFT and DeFi kind of joining and becoming the same, right? So what does that mean? So imagine everything you're doing with DeFi, being able to do that with NFTs. I know the projects are trying to let people borrow against their NFTs, but it has to be done right, especially after everything that's happened in crypto when it comes to lending. But I think when it's decentralized, it's better, right? Who's going to lead that? I don't know. There've been some posts that Uniswap is experimenting with adding actual NFT trading. I mean, if that happens, that could be huge, right? Imagine trading Bored Apes on, because they want to eat into the market share of OpenSea, right? So I think that has possibility, but somebody will have to innovate and have something that's 0 to 1 in terms of innovation in the NFT space to kickstart that new bull run in the NFT space. So I do think they'll bounce back, but I think there has to be a 0 to 1 innovation in that space. All right, man, these Jillian people cannot shut up. All right, give me a second. Okay, all right. What's 2024 look like with potential regulations coming? Well, I think that's kind of far away. To 2022. Depends. I think depends. I think you have to look at lots of things together, right? You have all these crypto bills people are trying to pass. They're going to kill crypto, right? Do those actually make any progress? Do those push crypto outside the US? Right, that's one thing. Two, if that's pushed outside, two, as mentioned before, what's the public trust when it comes to crypto? And for crypto to do well, right, how does it go even more mainstream? How does crypto become even more accessible? You have to almost build crypto where nobody knows it's crypto, right? Where crypto, nobody has to know what's the plumbing, what's in the inside. It becomes so easy to use, like your typical app, right? Now here's something I think could be very interesting, right? For those who saw the Mark Moss video about Elon Musk buying Twitter to basically turn that into a platform for digital money with crypto, right? Basically adding whether it's Bitcoin or Dogecoin to it. I mean, imagine if Twitter became kind of like Venmo, where you could send money to people or tip people or pay creators in Bitcoin or in Dogecoin. He likes Doge. Maybe that's why he likes Dogecoin, right? But I mean, that could be a catalyst for a new bull run, right? So definitely worth keeping, because think about it. We have all these different platforms now that have added crypto, right? Facebook and Instagram added crypto. You can now create NFTs on Instagram. So if Twitter added it, then I think that would add pressure onto the large platforms like YouTube. So I think regulation is a concern, but I think, hopefully, in my opinion, this whole FTX thing has all these regulators disbanded or cleaned up, right? Because if they're all taking money from SBF, they're all corrupt. They're all corrupt, all of them. So just clean house, have some new fresh people come in that are crypto friendly, and to the moon and beyond. All right, so let me check in with the chat and see how we're doing. And don't forget, smash the like button. Smash the like button. All right. Okay, all right. So, let's see here. Next question. Gaming seems to be a hot topic for adoption next cycle. Do you agree? Yes and no. I think yes, gaming, even this cycle, because you had Axie Infinity. That was the catalyst for the whole NFT / play to earn narrative. So just like I mentioned earlier, that was the first innovation. Now we're going through a bear market. It's going to be a long crypto winter. For it to come back, there has to be a 0 to 1 innovation, right? I highly recommend you read the book 0 to 1 by Peter Thiel, one of the best books out there for entrepreneurs, but also understanding how technology evolves. So what does that mean, 0 to 1? Rephrased differently, you have to create a technology improvement that's not just orders of magnitudes better, but is 10 times better than what came before, right? So imagine, like, let's take Uniswap V2, right? Prior to that, you had basically Ether Delta, right? For those of us who used Ether Delta back in 2016, 2017, I mean, that was a DEX, but it wasn't really that good of a DEX. And just a way for us to just trade and just get out. Uniswap V2 created liquidity, decentralized liquidity through liquidity pools and AMMs. That was orders of magnitude better, right? V3 was kind of slightly better, but we have to have the same thing happen in gaming. So the question is, who's gonna cause that to happen? I mean, I think I still have my Bored Ape, my mutants and other deeds. I think their game, their metaverse, if that goes mainstream, that could be 0 to 1, right? If that becomes like Fortnite or all these different gaming, I haven't really gamed too much recently, but if that becomes like the next big game, and it's a crypto game, where it's crypto underneath, and it's NFTs, so I think the 0 to 1 narrative for crypto to be a hot topic for adoption next cycle is, you have to have a game go mainstream. It's a crypto game where people can sell NFTs. So everything we've talked about, that has to happen. It has to happen efficiently, has to happen fast, has to be a game that competes with other games in scale and size. I think when that happens, that's a huge boom for the gaming space. All right, next question. Do I think Grayscale will dissolve? Yes. I mean, it's unfortunate, but That's why I cashed out, man. Like, preservation of capital is crucial at times like this, right? We've dodged. We did not dodge all these bullets, right? From what, Celsius to 3 Hour Capital, UST, Luna, BlockFi, FTX, Alameda, right? We didn't dodge all that just to end up taking an L on Grayscale and DCG, right? So basically, you have to keep on dodging these bullets, right? It's kind of like you playing a video game. We didn't get through all this and about to get to the last level just to take an L with this, right? Because of the exposure to Genesis trading. So right now, cash is king, but even stablecoins, right? So let me pull up what I've been sharing in the private alerts channel regarding this with our customers. I believe private alerts channel is available to advanced plan and above, but just some different things that have been I've shared. I need a few seconds here to pull this up. All right, so this is one article from the block, basically saying Genesis warns of possible bankruptcy without funding from Bloomberg. Then the other one is, so some tweets here. Yeah, because basically you have a bunch of crypto contagion happening, right? But basically, let me put up this other one, and this was a really good tweet from Yana. But basically, to kind of explain what's happening, all these companies have been basically just borrowing money against each other, right? Basically, DCG, Digital Currency Group, the parent company of Genesis Trading, borrowed money from it, right? So it owed it money, right? And then Genesis Trading, they lent money to FTX, Alameda, all these other companies that, even 3 Hours Capital, they went belly up, right? Basically went bankrupt. So now Genesis Trading has no capital, or is out of money. They're trying to raise $1 billion. They had to bring that down to $500 million because somebody wanted to fund a company that's about to go bankrupt. And now they owed money, right? Oh, I'm sorry, DCG owed money to them. So now it's like they've just been borrowing money in a cycle, basically in a Ponzi. And the reason why this matters, right? Genesis Trading is what all these big exchanges use for the yield programs, right? Gemini Earn program was basically outsourced to Genesis Trading. So all the funds they had, and same thing with Circle Yield, it was outsourced to Genesis, right? All those funds are probably gone, right? So if you're an investor and you run those yield programs, your funds are probably gone, which sucks. And so this is a huge part of a huge blow for this space, bigger than FTX, right? Because if I go to this tweet, right? Also, they own a bunch of Bitcoin, right? So let's see here. So this is the amount of BTC holdings Grayscale has, right? So according to this tweet, they have 13 billion BTC and 3.7 billion in ETH, right? Now, I'm not sure if they have to liquidate this, but they might if they're insolvent, if they go bankrupt. Now, this was a different tweet I want to pull up. This is a great explanation of this tweet. Let me post this in the comments. You guys can check this out. And basically, Yano says, they basically give out, in Q4, they gave out, they had $50 billion in loans, right? 12 billion in active loans, 30 billion in spot volume traded, right? 20 billion in derivatives, notional value. So basically, they're one of the biggest institutional firms, if not the biggest in all of crypto, and they're going belly under. And they lent 2.4 billion to 3 Hours Capital, and they filed a claim for 1.2 billion. Okay, so like Gemini Interest, powered by Genesis Trading, that's gone. That's kaput, right? Let me see anything else vital here. But I mean, that is a huge blow for the space. So yes, I do think they will dissolve. I think they're kind of prolonging it, but stay safe. That's all I can really say. Stay safe out there. Preserve capital. Okay, next question. Are institutions, VCs, scared of the space? Are we going back to 2017 days where it was mostly the people fundraising? And how does that affect total market cap? Thanks. Yes and no. I think it's too early to tell, but I think so. I think institutional trust in crypto is gone for now, right? FTX was a darling for smart money, for Wall Street, right? Because there were the opposite of Coinbase. Coinbase was for retail, Binance for retail, FTX was for institutions, right? They had Anthony Scaramucci and Kevin O'Leary, all these Wall Street guys. They partnered with SALT, which is a big institutional conference. We were actually at FTX SALT conference in Bahamas, and we also went to the conference in New York last year. And they were just pumping FTX. Well, they're pumping FTX and Solana. I wonder why now. Partly Avalanche, but basically those two. Right? But now we know they're all kind of in bed together. Right? But basically, all that interest, but I think the trust, because smart money thinks they're smart. Right? So when they get finessed, when they get rug pulled by the person they were out there campaigning for, right? That's egg on their face. And then they have to explain that to their LPs, to their investors, and it does not look good. So it's gonna be a while until they start wanting to come back in crypto. You basically have two camps. You have crypto VCs who will still be investing in crypto, but those people that came in with the whole Web3 narrative that got wrecked and had funds stuck on exchanges, those are the ones that will be afraid to come back in, right? Or even pension funds, right? Pension funds that invested in FTX. So until we start seeing, because we haven't really seen any new data when it comes to institutional fundraising, it typically comes out quarterly. So that's why I said it depends on what the data is, but based on what I'm hearing, I think it's going to be very, very low. Because VCs were already getting out of the space, right? Because capital, it was a bear market, but now with all these large events happening, it's going to take a while for capital to flow back in. And capital will only flow back in once we're back in a risk-on environment. So I mentioned earlier, right? Risk on, risk off, but not just a risk-on environment. It has to be a prolonged risk-on environment. And that typically does depend on the macro, right? Because typically the way it happens is you have all these large public companies making money and they want to put capital, right? But then that trickles back into VC, right? It's kind of actually no, it's more of a cycle. And you have companies going public, then companies that are public trickling back into startups, right? So what does that mean? So take, for example, you had Coinbase IPO'd. That was but that came from 7 years or more of angels, VCs going through A rounds all the way till E rounds, then an IPO. Once they IPO'd, then you had this big narrative that, oh, crypto is here, the first blockchain crypto IPO, Coinbase, right? The IPO basically at $80. Now the stock is down 80% or more. Now, but once Coinbase IPO'd, right, that was kind of the top. Now you had, okay, there's this success story. It's possible to make money in crypto. Then you had this Web3 narrative come through. You had all these non-crypto funds raise a bunch of money to begin investing in Web3 as the future of technology and the internet. And then they got wrecked, right? So it's kind of coming full circle, right? They see this big win, then they all want to come in and they buy the top. Basically, smart money bought the top, right? Then the bottom could be basically this collapse with FTX and maybe DCG. But then we have a long waiting period. So to basically go back to your question, yes, VCs are scared of the space right now, in my opinion. And I think we could be going back to 2017. So the question is, if we're pushing reset and going back to 2017, actually not 2017, 2018 bear market, and we have to wait until 2021, maybe even longer, right? Let's say 3 years or more. That's kind of what's happening. Now we can still make money, right? Because there's lots of alpha, but we have to be patient and have to preserve capital. Okay, let's see here. Good to see you too, JJ. Yes, this stream will be posted. Let's see here. Okay. This stream feels like 2017, 2018 golden days. Hope this turns out well. Again, history repeats itself over and over again. We traveled back in time. Yeah, we're back in time. Here's a new opportunity if missed the last bull. Yeah, I mean, I'll be here. This will be a weekly stream with me, myself. As mentioned before, the 3 analysts are not with us anymore. Back to the grind. Crypto moves on. Not our first crypto winter, right? It's unfortunate what happened, but we've already issued our statement on that. And as I mentioned before, we do not support GLDN. That did not meet our research protocol, and that's why all the content about it has been removed. I think, in my opinion, it is a Ponzi. Right? I would not touch it. If you like gold, I prefer Pax Gold over that. I don't think you have to add Ponzi-nomics to all of that. But anyway, we're here, just like the good old days, doing research, hardcore research, data-driven, using our platform, and I'll be here to help answer any questions you have via AMAs. And then we'll also be doing the customer webinar once a week as well. And I'll be involved in the private communities we have on Discord and the Alpha group for Astrobot holders, and the private alerts and groups. So yeah, I mean, just like the good old days, back at it again. Still bullish on Casper Network. Good question. So when they launched, we said that their technology was good, but their valuation was way too high, and better to wait for a crash. The crash has happened. We can actually pull up Casper on Tokenmetrics. But their ecosystem as well has not grown, right? And I think that's the big thing you have to really be concerned with. So if anything, right now, I'm actually even more bearish, honestly, right? So in the last 1 year, it's down 81%. So, I mean, if you're trading it, that's different. If you're thinking long-term, because long-term now, the space is getting saturated with L1s. So how is Casper different, right? You have all these other L1s launching. You have Aptos, you have Sui, you have Safe for DeFi, you have Cosmos, you have Arbitrum, Optimism. So it's getting so saturated, right? So right now, their ecosystem growth, I'm not seeing it. I don't even think they're on here. So looking at this, so Casper, yeah, Casper is not even on here, right? So until I start to see, because now we're shifting from grading this as a VC project or early stage project to, okay, it's now on public markets. What has it actually delivered relative to every other crypto asset we can buy or every other competitor we can buy in the space, right? And right now, I am not seeing that, right? That traction, right? Because if we go to chains, actually, maybe that's why it wasn't popping up. I was on Dexys. Casper. So let me try just typing in Casper. Yeah, not even here. But I mean, this is their competition right now. All right, so right now, honestly, I personally would not invest in it. Now, I might watch it, have it on a watch list, and see if they're growing. This is why you have to keep your pulse on the market in a bear market. I mean, because let's say they begin building, then over 6 to 12 months, developers just love their ecosystem, but you're busy on vacation or you're out of crypto and you missed that. Next time you hear about Casper will be when Casper is blown up, done 100x, and you're buying the top and getting wrecked. Now, that's why you have to keep your pulse in the market. You can be in stable coins or in cash, but still have your pulse on the market. Okay, what signs are you looking for? Risk on. Price levels, more liquidations, slowing rate hikes. Honestly, our Tokenmetrics market indicator does it all. I mean, it's that simple. This is why we made it. And if you missed the beginning of the stream, we have a Black Friday 40% off promotion. just go to tokenmetrics.com, put in the code HBD40 to get 40% off. But basically, when this turns bullish, that's the first sign, right? But if it stays bullish for a prolonged period of time, that's the second sign, right? So right now we've had lots of false positives, right? But if we go to like the max here, because basically we had this, so we had basically summer 2021, DeFi summer, all the way till November. That was the top, basically, right? Then we got out. We had these little mini runs, right? Some fake outs, but I'm basically looking for that. I'm looking for bull and bear gauge on here to turn super bullish, like basically in green. All this, or most of this should be green, like 80% of this ideally green, right? And basically down here, this is all on the market page, altcoin season, right? Or actually, no, I would say you kind of want to get in when it's not Bitcoin season anymore, right? This is basically the reversal. We're out of Bitcoin season and we're heading towards alt season, right? So kind of the same thing, right? Here in July, all the way till August. August was the top. You can still make some money on the way down, but basically November, where's November? Actually, not nice. This is this year. I'm talking about last year. Actually, I'm sorry. Right, reversal was here, because right now I'm comparing this to this, right? So we had here basically the bottom, based on the percentage of TM grade signals. So July 2021, the top was November. So looking at this, yeah, July was basically, this was the bottom, right? So basically here it bottomed, then November, yeah, back to Bitcoin season. So basically from here, went up here, came back down. And then we kind of had this again this year, actually. It bottomed, went up. So basically you're looking for altcoin season or anything that's not Bitcoin season, right? Because right now Bitcoin is kind of the store of value, right? But basically, if it's not Bitcoin, if it's altcoin season or heading towards there, and it's bullish here, and this gauge is in the green, and going back down here, we start seeing different sectors, or pretty much all these sectors just start ripping, right? That's really a good time, right? That's risk on, right? But obviously, the market is crypto, it's volatile, but this is why I love this page. This is why we designed this page. It's designed to tell you basically risk on, risk off, right? Is it bullish? Risk on. Is it bearish? Risk off. And this page is available on the platform. It basically takes all our grades and gives you a summary. Risk on, risk off. Actually, one thing I forgot to say, so you take all that, you can also use our sentiment page, right? So if you go to sentiment, we do have sentiment data, right? You start looking for what coins are positive, right? So right now, so this is basically looking at Twitter data, Reddit data, Telegram data for whatever coins we have. I think currently it's only like 30 coins because not every coin has everything, but we do plan to add more. But for example, right now, XRP, because of the whole SEC case, is very positive that they might win. You have Near Protocol, you have Ape, right? So ApeCoin is positive, which makes sense because they announced, I think yesterday, that they're launching the alpha or the beta on Christmas for their metaverse. So I think that's why it turns positive. So this kind of gives you an idea of where to start, right? You have Avalanche, you have Cardano being positive, Dogecoin. And then down here you have, okay, what's not positive right now? Right, so basically all of this, right? FTX negative, right? Of course. But yeah, so this also kind of this is more for daily trends, and I would say like 1 to 3 days, maybe worst case the week, but typically this is more short term. right? So kind of like with Bitcoin pumping. Well, actually not pumping, but sentiment-wise pumping. Okay, next question. I want to rep my other astrobots. If not, there's no incentive for holding more than one. Good question. Someone did bring this up, I think, in the Discord or somewhere else, and we looked into it. This will take some time to implement, but it is something we will definitely consider. If you know anybody else who's done this from a technology standpoint with smart contracts, definitely let us know. I know Moonbirds has nesting, but renting other astrobots, I think that'll be pretty cool, right? So if you can just share with our team in the community how you think best to do this, that'll be pretty good, right? But yeah, I think it's something I'm definitely for. I don't see why not, right? It obviously gives more value to our community. Speaking of that, we actually did earlier this month. We made a buyback and burn of the Astrobot NFTs based on community input, right? So we bought, I think it was what, 28 grand worth of Astrobots. So the flow went from like what 0.15 to like 0.4. Now it's back down to like what 0.2. And the plan is to use the community treasury based on community voting, right, to buy back these Astrobots, right, every quarter, right? So stay tuned. We'll have more to buy back, right? But I think that this is something that will make sense, right? Because it'll make them more scarce, right? So basically, based on community input, we're buying and burning them. But yeah, let me move on. Who wins 2024 election? Biden, Trump, or Kanye? Haha, thanks, Ian. Honestly, no, I don't think Kanye's going to win. Trump did just get back on social media, well, on Twitter, but he's still banned on all the other platforms. He has to have that reach. But Twitter, I mean, I'm loving the new Twitter. Elon Musk and Twitter, and Twitter Blue. I mean, it's faster, it's just better. I wasn't really a big user of Twitter, but I've stopped using other platforms. I don't really use Instagram anymore. I'm off of it, deactivated. But Twitter, I'm glued on Twitter the most. Right? Actually, I mean, to some points, almost just as much as Telegram. Because Twitter is where breaking news happens. Twitter journalism from other users covering DCG, FTX, and everything collapse was much better than the media. The media, one, is bought off, as we've seen with SBF buying everybody off, New York Times, Washington Post, and those journalists. But two, actually, that's my train of thought. Okay, so he's bought off the journalists, but I think, first of all, Elon Musk changed the algorithm. Well, not changed, he took away all the censoring that was happening. So now it's just much more efficient. There's no like woke stuff happening. It's just give us the real stuff, and to me it's just more efficient. So I'm glued to Twitter a lot. Now Biden, I think Biden's too old, man. I mean, he had what, his 80th birthday. I mean, I don't see how he's going to be the president of the U.S. at 80 years old. I mean, the average age of retirement in the U.S. is 65 years old. So he's trying to run the free world at 80 when he already has allegedly dementia or Alzheimer's. I'm not sure exactly what it is, right? I think, but basically memory loss, right? I think we need just somebody better. So honestly, I don't know. But I think whoever wins should be pro crypto. Right? To me, that's the only thing that matters. Pro crypto regulation in the U.S. Right? Basically, I'll be a single topic voter. That's all I care about. Right? If they want to kill crypto, I hope they lose. That's simple. All right. So moving on. Last bear market, we had Matic and Helium. This bear market, we have HiveMapper. I'm wondering if there's anything else. Yeah, I mean, so HiveMapper, for those who don't know, it's basically drive to earn. It's a device kind of like Helium. It's a dashboard camera. You put it in your car, And to me, why I think it's a great bear market play, one, buying the device is $500, so there's an investment. But after that, it's just driving. Right now, the concern would also be that it could face the same problems Helium had, right, and Stepan had with walk to earn, or right. But basically, if you just accumulate, if it does well, that's good. If it doesn't do well, you only add $500, right? Because think about it, if you drive, you're driving anyway, right? So for me, I don't drive; I just Uber everywhere. But I ordered 2 devices. I don't think that's shipped yet because I'm back home. I haven't seen anything yet, and those supposed to ship after breakpoint. But I haven't really kept tabs on the community, so I have to follow up on that. But I have family. My brother, my parents drive, and they love doing road trips. So the plan is just get them the devices when they drive around the city, road trips, just make a bunch of high mapper tokens, right? So if it does do well, you're good, right? One thing, kind of like how people got a bunch of heliums, but that's hit or miss depending on how early you are. You could just get a bunch of Uber fleets, Uber drivers, and just get them the dash cam, right? Because let's say you have 10, 20 Uber drivers, right? Because people kind of do this with Turo, but also with Uber, right? Because I know some people have an Uber business where they buy cars. Like let's say you buy 10 cars, and then you partner with drivers. You actually don't drive the cars, but you partner with the drivers and say, here, I'll provide the car. You basically either rent the car from me or whatever. We have some kind of deal, and we share the profits, right? So you could actually do this with that kind of Uber fleet, but with HiMapper as well. So I think, to me, this is kind of double dipping, but that's one way I think you could really find value in the bear market, right? But obviously, you have to get in early. You have to accumulate. But once it goes back to being risk on, you have to start taking profits, right? Buy low, sell high. So if there's anything else out there that I like, well, let me see if I can, because on the TMV side, we've made some early stage investments, but most of the investments we've been making with Tokenmetrics Ventures have been in almost infrastructure middleware, right? Kind of connecting lots of other things. So I can share with you the recent investments TMV has made, but these are more risky. These are riskier. This is hit or miss, right? So this is not like where you just earn it from. But anyway, so there's Airstack. Airstack crypto. So we got, there's Airstack, that's one. Then there was Airchain. Then there was, recently we made investment in Nolus. This is more risky because it's lending after everything that's happened, but it's decentralized lending. Then what else do we invest in? Nibiru, we invested in. Where's the website? What else do we invest in? That's what's coming off the top of my head. Nillion, we invested in as well. But right now, I kind of, before I share that, I want to kind of give more context, right? So, disclosure, as everybody knows by now, I'm a founder and CEO of Tokenmetrics, but I'm also a general partner of Tokenmetrics Ventures, which is a crypto fund that is relatively small. It's basically just our high net worth customers. This is in no way, shape, or form a solicitation for any funds at all. But basically, what we do is it's part quant fund, part a VC fund, and the VC fund is basically a third of the fund. So basically, we just write small checks. Basically, we do our research based on fundamental analysis, based on code reviews, and also based on other data points, right? So who the lead investors are, right? And we take this strategy, and we're writing small checks, small bets, small calculated bets on projects we think have good upside. What does that mean for us, right? So good upside would be minimum 10x return in our opinion, but ideally higher, right? Let's say 50x, 100x, but that depends on the market, right? But ideally, we'd like to see a project where we can 10x the money, right? With those small VC investments, right? So let's say like the fund is about 10 million, and let's say we're investing about $3 million in capital on the VC side. We're writing small checks based on the ratings. So let's say if it's fundamental rating, we do like 50K. If it's if the code review is good, we'll double down and do 100K, right? But let's say we're just doing those small checks into those projects. Some of them could go to zero. Some of them could do pretty well, right? But preferably, we'd like them to do a 10x. But based on our research, we're also comfortable with them going to zero, right? That's kind of the VC game, right? In VC investing, basically, let's say 8 out of 10 go to zero, right? But 1 or 2 are home runs, right? They return the whole fund and more. That's kind of the strategy of VC investing, right? That's kind of how our fund invests, right? So these are basically small checks, small calculated checks, right? But basically, what comes to mind, I think definitely interesting, Airstack data infrastructure for Web3, right? Basically, think of this as Chainlink for other dApps to talk to each other. It's basically an oracle for other dApps to talk to each other and share data amongst each other. Definitely worth looking into. Airchains, this is basically a platform that lets you build and deploy and grow your own dApp, right? So it lets people, if you want to launch your own chain on Avalanche, Cosmos, Polygon, Edge, Polkadot, Celestia, Ethereum, push of a button lets you do that. So definitely worth looking into. They're actually an Indian team as well. Kind of reminds me of Matic Network, Polygon, back in 2018. Also, infrastructure middleware. All right, so this is Nullus. This is basically the world's first DeFi lease. So it sounds super risky in times like this, but it basically lets you borrow collateral that's more efficient, more capital efficient, right? So you can borrow 150% of your collateral, but it's locked in their ecosystem, and you can't get it out until it's been repaid, right? Kind of took us a while to really get it, but definitely worth, I think, looking into. I think definitely worth looking into. Then we have Nibiru chain. Let me actually go to the actual website. Yeah, so basically this is, when I said we're bullish on the Cosmos ecosystem, this is also one of them, right? Unlock leverage at scale for the Cosmos ecosystem. Actually, let me actually go back over here. All right, so I'm just kind of so basically Nibiru unifies leverage derivatives trading, spot trading, staking, bonding. So basically think about all this on the Cosmos ecosystem, right? So kind of competing with DYDX, but on Cosmos. Then Million is a secure processing layer for Web3. All right, so all these interesting projects, looking into them. And once again, these are very risky. Early stage projects haven't even launched yet. But I wanted to just kind of help give guidance into what we've been investing in through the fund in a bear market, right? Let me see anything else out there what we haven't covered. Oh, actually, yeah, well, we also invested in Blockless. Yeah, so basically it's been all infrastructure, middleware, lots of middleware. All right. Actually, did we invest in this? Okay, hold on. Okay. Apologies. I have to confirm if we actually invested. I think we did. Or we're talking to them in the final stages. Basically, launch your project on a decentralized global network. Yeah, we did. So basically, so for Web3, we kind of had progress with Web3, but now I think getting interoperability, getting dApps to talk to each other, getting more of the middleware stack has been something we've been focused on. So that's that. Has the team researched Crank.ai? No, we've not. Let me just put this here and see what comes up. Okay, so it's on Cadena Network. So is this Helium network for on Cardano? On the Crank token on the Cardano network, right? Operating low-round gateway node. No, we have not looked into this. I'm not gonna do this here now, but I'll share this with our team and have them look into it. Let me just put this in the research chat. Okay. Okay, all right. Will alerts on TradingView be functional with the new indicator? Actually, that's a good question. That I'm not sure. We'll have to ask Jad. Jad would know, and Jad left early in the stream. But I think we'll find out and put that on the FAQ. Let me just tell the team to add that. Okay, and our team just said TradingView indicator is live, officially live. So if you have not ready, purchase it. First of all, if you're already a customer, all plans have it. Whoops, I'm hitting stuff. All plans have it if you're a customer. If you're not, the good news is you can purchase this as a standalone product. Where do I go to? What page? All right, just go to Tokenmetrics, pricing, TradingView indicator, buy the indicator. All right. So when you buy the indicator, right, so basically you have two options. You have monthly for $15 or yearly for $150. But if you use the coupon code for Black Friday, HBD40, I think it goes till Cyber Monday, I believe. But basically this gives you an additional 40% off, not 20, 40% off. So that is a steal. Right, so get it while it lasts. I would recommend the yearly because you get 2 months free, plus the extra 40% off. I mean, that is a rare deal. Right, so what happens is once you buy it, you basically we'll have the guides up later. But basically, once you buy it, you go to the settings and in your Tokenmetrics account, you put in your TradingView username, you save it. And then we'll send you an invite because it's an invite-only script in TradingView. So when you go to your scripts in TradingView, there are two scripts that will appear there. Right? So definitely try it out. Let us know what you think. But this lets you use our TM technology in TradingView on whatever crypto asset you like. And you can also customize it as you like in terms of the different trading styles, as shown in this live stream. So this is a game changer because first of all, this goes both long and short. Right? So if we're in a bear market and you're mainly trading and you want to go short, this is perfect for you. All right. Are you going to reinstate the previous mods? Hell no. Sorry, but I mean, the ones that are not with the company anymore. I mean, as mentioned before, I mean, first of all, GLDN was in my opinion, is a pump and dump. Right? The fact that they even let that project be shilled in our community, in our alpha group, and there were mods. There were one analyst that we had given him the responsibility of moderating that group to prevent shilling, but because of their conflict of interest that they did not disclose. I mean, we knew they were holding it, but we had no idea they were working for the team, that they were hired by the team. From Bill, Jacob, and Daniel. Right? So basically, we had a bunch of people that broke our employment contract, right? When you hire somebody, there's what's called duty of loyalty, right? And conflicts of interest. Right? Somebody that's being hired to work with us, but is also working with this project as a community admin or mod. Obviously, you can see how they, and then the other mod had 3% of the total supply of GLDN. And so you can see why they would let shilling just go rampant, because they were conflicted, and that we cannot tolerate at all. Right? So basically, they're not with the company anymore. I wish them the best, but they're not with us anymore, and we definitely apologize for everything. That should never have happened, and that content has been removed. Right? But I don't want to talk too much about them unless that's what you guys want. Right now, I'm just kind of going based on what people are voting here on. As a lifetime holder of a premium Astrobot, I would like to see the TM trading indicator included. Yeah, I mean, so it is included, right? So as mentioned before, all the plans have it. So what I said is this is a standalone. So if you want to buy this by itself, but if you just go to our Analyst platform, this is something everybody has. Right? Has this? Yeah, right here. TradingView indicator. Basic plan, advanced, and premium. Lots of our customers have been asking for this, right? But now all the plans have it. So every plan now has this. So hopefully that answers your question. Okay, Deuce Protocol will flip GMX and gains trade. Their narrative is here, and derivatives, DEXs are money makers. Please research. Okay, we can have our team look into it. But yes, derivatives has been something we have been researching already with our team as a space. Actually, let me just pull up their site. Yeah, I just shared with our research team to look into. Actually, if we go to DeFi categories, yeah, derivatives. Yeah, so basically these are the hottest projects in the space right now. So we have GMX, DYDX, which I mentioned is on Ethereum, but moving to Cosmos, which was a big signal to the whole space. Okay, why are they doing this? This is a big vote of confidence for Cosmos. We have Gains Network, and the rest we haven't really heard of. They're kind of no names. This we covered a while back, hasn't grown much. This hasn't grown much as well. Yeah, basically GMX has done pretty well. DYDX, Gains Network is done pretty well. But yeah, I mean, we'll look into it. Is Helium a dead project? Due to no real partnerships, thus no rewards, and hence no point in having a hotspot. Honestly, yes and no. But for the time being, honestly, I will say, for the time being, Helium is dead. I'll tell you why. One, well, we're in a bear market, right? As mentioned before, going to where is this page? It's a risk-off environment, right? So I think the money has already been made in Helium Network, right? It was a 400x return, right? I hope people who were in it cashed out, because I mean 400x return is a lot of money. But for me, what changed is once the mining rewards became nothing, it wasn't worth it to mine anymore. Like I'm not even mining it anymore, right? Because when I moved places in Austin, because I was staying like literally in. Actually, funny thing is I was staying next to Multicoin Capital building, right? But basically, I was in the most saturated tile in all of Austin, right? So I was like, I'm not earning anything, and I spent like $2,000 to buy the 5G, but I'm like, why am I wasting money on this? Right? So I haven't even bothered to hook it up, right? I'm still staking my HNT, but even that, I do plan to unstake. I have to just figure out how to unstake because I stake via the terminal, and I've just been too busy to just go on a terminal and just do the unstaking because I've been traveling different devices, and then the reason I'm doing it now is because one, I believe when you unstake you have to wait like 6 months, right? So it's a long period. So I think if we're in a risk-off environment now, I want to unstake now. Still have my tokens, but let's say 6 months into the future, it's risk on again. That way, I want to have the ability to take profits, right? So unstaking now, well, once I take care of that is my plan. And then 2, the fact that they're switching from their own blockchain. 2, Solana is execution risk, and that's huge, right? And then 3, Solana is getting wrecked, right? As we mentioned before, right? If we go to DeFi, if we go to chains, Solana is getting wrecked, pummeled. All right, so those are 3 risks, right? 1, people are not earning money anymore from it. 2, actually, I'm sorry. 1, we're in a bear market, risk off. 2, people are not earning money from the rewards at all. Right? 3, they're pivoting to Solana. 4, Solana is wrecked. Right? So Solana is 11th on their 1 month change in TVL is down 70%. 70%. Right? So do I want those 4 things in Helium at the moment? Unfortunately, I do not. Right? So it does pay me to say it. I mean, Helium did pretty well, but now with all these in the market, our number 1 objective is to preserve capital. Right? So yeah, basically, now I'm not saying they're dead forever, but basically I'd rather honestly sell my HNT and put that in Hivemapper. But even that also has some risks, right? But it has a lower valuation, right? If anything, I think maybe just buying devices, but not everything, right? So you have to kind of balance all this out. What has more upside, right? HNT is kind of now going on the downside. Then you have the FUD added onto that. So if anything, I think just being in cash and looking for the next Helium is better at this time being. If they're able to bounce back, that's fine, but I want to have the option to go back in or leave. Right, so that's kind of the way I view Helium. But yeah, it's definitely unfortunate. How big of a role do you think security tokens will play in the next bull run? Honestly, not much. I mean, and because we have to first get regulation for crypto that's clear and transparent, and we have to clean out all those old regulators that were archaic. So until that happens, I don't really see security tokens doing well in the next bull. Do you believe that USDC will become the digital dollar for the US? No, I don't think so. I think, if anything, the government will make their own digital dollar. I mean, I've heard some conspiracies of that. This whole collapse of crypto is being done by insiders. Collapse crypto. Avoiding holding. Because there's just too much exposure. Right? Let me share what I shared with our private alerts channel on Telegram. But basically, how do I? Okay, here I'll just show you how I go through and research rumors, right? In a time like this, right? Let's say you're thinking of getting USDC. This is why I love Twitter, right? And the new Twitter, right? It's a lot more efficient. I'll just come in here, put in the hashtag USDC. Actually, I'll just put in USDC. Let me type that again. USDC insolvent. That's the trick I've been using. Right, then you come in here and you see all the top posts on how people are speculating that is insolvent. Right, so Dirty Bubba Media. This guy's actually pretty good. I follow him. He was one of the first people to signal that FTX was insolvent on Saturday, and we were like, "Oh crap, get out the market," because he had this long thread on it. But basically, he's saying Tether, USDC are both insolvent shitcoins, even if everything they claim is true. How long before the market figures out? Now let's see if there's any actual truth to this. Okay, so he's basically reaching somebody else's tweet. Let me read into this. Okay, so cannot believe this isn't getting more attention given that actual cash reserves are either minuscule, generous view, or totally opaque. Skeptics. Hold on, is this Tether or USDC? This is the dollar. Yeah, I'm not seeing much on here. Okay, this might just be FUD. Okay, yeah, maybe that's not the best one. But let me find a different tweet. So I'll just kind of go through all these tweets. Well, actually, so where am I getting these ads on these videos? What happened? Okay, I guess it just updated. Yeah, so basically I just like going through tweets. Okay. Yeah, so actually Reggie Middleton has been talking a lot about Tether potentially being insolvent. I met Reggie actually at my first crypto conference back in 2017 at Token Summit. You know, basically he has this report about USDC possibly being insolvent. Worth looking into. He had a video that was much shorter on his Twitter. This was back in July, right? Then we see something here. Yeah, so I just look at all these rumors on Twitter and try to see if there's any kernel of truth to any of this, right? Then if we go to latest, this will show you any recent FUD. Okay, so right now I'm not really seeing much. Let me actually go to videos. Okay, nothing here, right? If we go to Tether, I'll just put in USDT. Okay, not videos. We don't want. I'm not sure what that was. Okay, so pretty much you have to kind of just see what the speculation is and see if there's any actual kernel of truth to any of this. Okay, so this person is saying shut down USDT, they're insolvent, the time is now to clean crypto house. So yeah, that's kind of how it goes, and that's how I researched FTX. So let me actually do Circle insolvent. This might bring up what I wanted to pull up. Okay, that's not this crypto circle. Okay, that's just FUD. But yeah, I mean that I won't delve too much into it. But that's how I research rumors in crypto Twitter before they're in the news. But by the time it's in the news, it's too late. Okay, all right. Nothing there. Cycle top prediction for ETH and BTC, price and date just for fun. Well, I can't really predict the price and the date because my prediction last year was, I think I said what, like 40 or 50K for BTC. You went to what, like almost 70K, like 65, 70K. At this point in time, so I'll show you how I did the last prediction. Basically based on the halving. This was like the halving prediction, basically. Right, you just put in BTC halving chart. Yeah, and it was basically this chart. Was it this one? Yeah, it was this chart that I used. And it wasn't really that technical. Okay, what's going on here? Let me find a different one. Okay, let me try this again. Okay, I'm saying that's malicious. We're not going to do that. But that was the chart actually I used for the last prediction. Let me see halving, mining. Okay, all right, yeah, that's not working. Let's just see here. So here, I'll just use Tokenmetrics scenario analysis. It's actually, if we have this here still, yeah, price predictions. Do we move this? I think we move this on investor. Yeah, I'm still running this as well because we have a whole new land we launched. Okay, so this is Bitcoin. We're currently at 16,500. So current dominance is basically 36%. Let's say under 40%. Market cap 320 billion. So, question is, where do we think Bitcoin can go? Right? That's the question. Crypto is basically currently under $1 trillion. So, basically, this is somewhere. Yeah, somewhere around here. So let's say crypto goes to 3 trillion. That's Bitcoin at 57K. But that's the next cycle. Okay, so Bitcoin went from basically what, like, last cycle's top was what, 19K? Let's say 20K. And it went to 70K. So this what, like, times 3. I think the next cycle is gonna be times 1.5 to 2 of that 70K. So we're talking what, like 140. Say, actually no. Let me just think about this real quick. $280. So between 140 and 280 would be the max I would think of BTC going, right? But I don't think it's gonna go, because I think BTC dominance will drop, because you guys know I don't own any Bitcoin. I think Bitcoin is old news. I think Ethereum is a better store of value in the future, and I think I would rather invest in the next internet than in a store of value, than in digital gold, right? So if we're saying dominance is going to drop, yeah, that's tough. Let's say dominance drops, but I think total crypto market will go higher, right? So let's say we go to 5 trillion. Honestly, guys, I'm looking at Bitcoin 47 to 95K as the range, because I mean, I think the flipping will happen. Ethereum will flip Bitcoin, right? Because how many altcoins are entering the market? New alts are entering the market every single month, and they're getting market share. BTC market cap, right? Looking at this, I don't think it's gonna, because it'll be lucky to maintain its market cap. Because going back to the other chart, right? If we go to the market page, I think that's how much Bitcoin has fallen. Like every single cycle, altcoins gain market share. If this will load, because I want to go. Because think about this. Right now, we are in Bitcoin season. We're in a bear market in Bitcoin season, and Bitcoin season now has become 36% dominance. Back in the day, last cycle. So actually, that's a better way of thinking of it, right? Last market cycle, Bitcoin season, Bitcoin dominance was basically 70% BTC. But now, Bitcoin dominance is basically, yeah, that's low. Yeah, so I think just based off of that, I think dominance would keep on shrinking, because it went from 70%. This was the high for last cycle. Now this cycle, the high is 36, because also gained market share. So next cycle, I think we're looking at half of that, 18%. Right. So because of that, if the crypto market cap goes to 5 or 10 trillion, you're looking at 47 to 95K BTC. I know it doesn't sound that exciting because people think, oh, Bitcoin's going to the moon and beyond. What if Ethereum and others flipped it? That's the real thing to look at, right? If the flipping happens and Web3 becomes the future, Bitcoin is just a store of value. Bitcoin becomes like digital tax gold, right? And like that's what it becomes. So as a result, my prediction, Bitcoin 100K next cycle. But obviously this is all just speculative based on just this scenario analysis that we have on Tokenmetrics. All right. Maybe a few more questions, then we wrap up in 10 minutes. Is America still the leader in the crypto space? Yes and no. The reason I say it is because there's lots of, America still has talent, right? Silicon Valley, developers, engineers, but they're all being pushed overseas. They're all going to places where crypto is friendlier, or they're launching projects overseas. Right. So, for example, whether they're going to Dubai, whether they're take SBF for example. Even though it was a bad example and it was a fraud, right? He was an American who went overseas, went to Hong Kong, then the Bahamas, right? So, in that aspect, there's still lots of talent. Like Coinbase is American, Uniswap is American, but crypto is global now, right? So, now I think from a regulation perspective, when it comes to, at least in the exchange space, Dubai now is the leader. Dubai has passed incredible regulation for blockchain and crypto. Almost every large crypto exchange has opened up either a hub there or has made up their new headquarters, from Binance to even FTX, Bybit, I think OKX and others. So like when it comes to crypto exchanges, Dubai is the place to be. When it comes to, I think like funds, I think this is still like BVI and Cayman Islands, basically in the Caribbean, for like crypto funds, launching them. When it comes to DAOs, I think Switzerland is still pretty good. That's where AstroDAO is, our DeFi protocol. But kind of like what I said, right? Like I'm here in the US, but the DAO is based in Switzerland. So they've forced us to go overseas. That's what sucks about everything. Okay. But yeah, I mean, so America, technology-wise, we're still up there, but we're developing and being forced to go overseas. What's my take on Ethereum? Oh, man. Ethereum is going to flip Bitcoin. The flipping is going to happen. Ethereum is a much better store of value. The flipping will happen, right? But I keep on saying this. Bitcoin has not innovated technologically. Or rather, its use case has changed. Is maybe a better way of putting it. Bitcoin is now purely a digital store of value and maybe a currency. But I think even a currency is not really the best. I think people now would rather use stablecoins to transact. Right? Now, we're still experimenting on having fully these centralized stablecoins that don't go bust, right? So basically not UST. DAI has been abducted by Circle and Coinbase. So it's not really, so now it's basically centralized. So that's off the pick. Actually, let me look at let's do Llama. Do we have stablecoins here? Yeah, stables. Right, overview. Because the reason why this matters is a huge part of crypto are stablecoins, basically currency, digital currencies, being able to transact. Right. So right now the dominance when it comes to stables, we have Tether, which is still number one, but or has its FUD. You have USDC, centralized, BUSDC, centralized, DAI, now centralized. So you have Frax. Frax, I've been hearing lots of good things about it. Our team's actually researching and comparing different stablecoins. We're looking into LUSDC, which is backed by Ethereum, You have Alchemix, which is also backed by Ethereum, I believe. But we're still missing that key stablecoin. Earlier in this stream, I mentioned about Curve Team, the founder Michael, launching a white paper about a stablecoin lending AMM algo, right? Basically, it's an algo stablecoin, but the reason why it could be very innovative, even though people think algos are done, innovation happens, right? This liquidate is real-time partial liquidation, so it's liquidating in real time, basically. Well, I guess semi-real time, but it's not waiting for you to go down to 40% to give you a margin call. No, it's happening as the price fluctuates, right? Let's say it's backed by Ethereum as collateral. As the price of Ether tanks, is using an AMM for stablecoins to liquidate. And then let's say the price goes back up, it will buy back your ETH, right? So it's pretty cool, right? I think definitely worth looking into. We'll have probably a report on it for our customers. But anyway, back to your question. What about Ethereum? So I'll tell you what I think about Ethereum, right? Going back to, if you go back to chains, right? Where are developers going? Where are they building? 2/3 are building on Ethereum, right? There are more active developers on Ethereum than they are on Bitcoin. That's why I say Bitcoin has not innovated. Bitcoin has not captured the heart and soul of developers. So Ethereum is the future, but Ethereum is not. Ethereum has flaws. Other chains could come and compete and take Ethereum's lunch, but for the time being, Ethereum is king. That's why I think it is inevitable Ethereum will flip Bitcoin. Developers, it has more developers. Long term, from now, since about the last few years, look at the protocols building on here, right? The TVL. Bitcoin is just gold, digital currency, but digital currencies, you have stablecoins. But I think the main issue, Ethereum has to scale faster, and that's where the L2s come in, right? That whole narrative of Arbitrum and optimism. Right now, Arbitrum, I think, is the clear winner, and then you also have Polygon as well. So these three, I mean, that's a pretty competitive race. So very, very bullish on Ethereum. I think that is going to flip Bitcoin. I keep on saying it, but I think it's inevitable. That's why I don't have any Bitcoin. Like, there's no reason to hold Bitcoin. But now, the question you have to be thinking is, if Ethereum were to falter, who will replace Ethereum? Because now we're looking for the next Ethereum, right? So before, people thought it was Solana, but man, it's getting wrecked, down 70% in TVL, and down 60%. Down almost 60% in price. So Solana is going to have a long winter, right? Solana is in hibernation until all the forced sellers have sold Sol, from Alameda, FTX, 3 Hours Capital, whatever, like all the smart money. After they've gone through arbitration in their bankruptcy cases and they've liquidated, then maybe it can recover. But it's going to be a long winter. So what can actually potentially compete with Ethereum next cycle? Binance Smart Chain, in my opinion, is too centralized. It will still have market share because people want to have just centralized entities. Tron, I don't think so. I think it's competing with itself with these L2s. But let's move that out of the way. We have Avalanche. That's why I do have some Avalanche. I'm staking Avalanche. I've been for about a year. But Avalanche is one. And then Cosmos. I'm not sure why they don't have Cosmos here. But Cosmos is definitely one worth looking into. Right? So I think Cosmos, Avalanche, those are the ecosystems potentially. Now, there are lots of other L1s we like. I mean, Solana is still on the list, but it's a long hibernation. Near Protocol is also one we like. But most of those projects, they have to get developers away from Ethereum. How do you do that? Right? Most of them are doing it by building EVM chains. Right? So if you go to here and go to EVM, these are all EVM chains that are competing with getting developers onto their project. So you have the L2s in here, but you have Phantom, you have Clayton, you have BSC. But outside of that, where's the actual innovation? And that's the hard thing, right? So if anything, I think you go here, right? You go to non-EVM chains that also have a EVM component. Right. So for example, you have near, even though the TVL is very low, right? But smart team, great, smart money is backing them, great technology, but they have Aurora, which is a basically L2, kind of like how Ethereum has Polygon, right? So you basically have near, then you have another L1 and L2 in this instance. That's an EVM chain. So you have both your non-EVM and your EVM. So in a way, it's kind of like they're copying the Ethereum model with L2s, or I would say more kind of like Avalanche with subnets. It's probably a better example, or Polkadot. Right. So in terms of what can compete with Ethereum, I know people talk about Cardano, but Cardano is overvalued. Think about this. EOS has more TVL than Cardano. Yet Cardano is what, like top 10 market cap? Like that's ridiculous, right? So it's overvalued. As a value investor, it's overvalued. That does not mean technology is bad. Technology is good, but it's overvalued. Then you have Aptos. They just launched, and they're almost close to Cardano in actual usage. Obviously, this is not the best metric, but it's good enough for now, right? Aptos was looking into some more, but when they launched, they were way overvalued. I can't believe people are still using NEO. That was the last market cycle. So here we have Bitcoin, 95 million. So I mean, that's kind of my take, right? So you basically have Ethereum is leading the way. Then you have other L1s competing with Ethereum for market share, and they're doing it by having non-EVM and EVM components to it. Then if we go here to Cosmo chains, Cantor is an EVM, so it's kind of the same thing, right? Cosmo is basically an internet of blockchains with lots of other chains. Then you have Cantor, which is an Ethereum EVM. So if you want to run Ethereum dApps, you can do it on Cantor on Cosmos ecosystem. So Cosmos is, in my opinion, very, very undervalued. All right, so I think we can end things there. Okay, last question. Will Astronaut Society Alpha schedule continue as previous? Will all NFT holders have access to TradingView indicator? Plans for new talent acquisitions? Which platform should we be following, Discord or Telegram? Great questions. Great way to end the stream. So now the schedule going forward was I'll be more involved in the alpha group, right? Basically checking in there, hopefully on a daily basis, but every few days, definitely each week, a lot more than before, because I was more active in the Telegram group than I was in the Discord, because there's just so many different channels we have. Now, if you have the NFT, you'll have access to everything, and the Telegram group I think might get better responses. But I know the Alpha group is probably more active, but it's just very hard to keep up with all the things in there, right? Because I think when I logged in, there were like 5,000 unread messages, right? So you can see how bad products can be shielded in there, and if the moderators were not moderating that, yeah, it was just a nightmare, right? But we're working on different ways to prevent that from happening that are more automated. But basically, I'll still be involved in both groups, but it's hard to keep up with all the messages in the alpha group. Now, everybody has access to the TradingView indicator if you're a customer. So you just log in with your account or your NFT, and you'll have access. And then you go to settings, and you enter in your username on TradingView, and it will invite you in TradingView. Right? Then plans for new talent acquisitions. So basically, we have two ways we're going about this. One, we're shifting away from having too much human bias involved and trying to automate everything. Right? So what does that mean? So for instance, we've automated the investor grade. Basically, the fundamental analysis component is being automated. This part should be updated once we have more data. But basically, we're getting different fundamental data points that our teams were doing, right? Take Jacob and all that, and others, and Chase, right? So looking at these different components, and we're automating them. I mean, I think this is going to be a big game changer, right? What does that mean? So for instance, take investors, right? I don't know anybody really doing this in this space, but we're basically going through, getting every project, then using different data sources, seeing what VCs invested in them, tracking the return of their investment, not when they invested through the sweetheart deals early stage prior to launching, but when it launched on exchanges, to see how are they actually good investors once it's trading on exchanges, right? So let's take Multicoin for example, right? Let's say Solana, right? We take the price when it launched and was trading on exchanges to where it is now. We add that to the Multicoin portfolio, and we track the ROI, right? And then we do this for all their holdings that we have the data for. Then we give that investor, that VC, a grade. Then we create an investor list, right? So we can see, okay, what great investors are backing this project, and we give it an investor score, right? I actually have a spreadsheet here. I can show you guys with this. This is an investor score, right? So these are investors that have scored well. Now a 10 is high, and the lower, not so good, right? So these are based on X amount of investments over time and the ROI, right? So we have some well-known funds. For example, we have, let's see here, Block Tower, Rockaway Fund, Electric Capital, Multicoin. We have NGC, Neo Global, Binance Labs, Solana Ventures, Dragonfly, right? Me Ventures. They're actually the fund that hosted us in India and made an intro to Polygon, Matic Network. So that did pretty well. Coinbase Ventures, right? So you see this long list of investors, right? We're automating all of this, right? Think about this, right? So we automate all of this. And if you go to our platform, you'll get an investor score, right? So just give us some time to kind of fully deploy everything, but we'll give you an investor score, right? So all these metrics, tokenomics is being automated, liquidity, all this, into just a single fundamental grade. And then same thing with trader grade, right? So in this case, right, trader grade is basically technical analysis grade and quantitative metrics, right? So this part is being automated. So ideally, we're shifting towards being a data and AI company, and we're trying to automate as much as we can, even the reports, right? Because if we go to summary, down here at the bottom, we're working on an AI-based investment report that can take all the data we have and turn this into a quick summary on the project, right? So in this case, right, we have Bitcoin as a buy actually based on this signal, right? Because this is and it's going through and explaining this. So that's one component. Then two, yes, Tokenmetrics is hiring, but we don't plan to have a huge research team, because we're shifting more towards having more data, more AI, more engineering, more of a tech team with a small research team. But if you go to our website, tokenmetrics.com, company, careers, you can go there and apply for jobs. We are looking for investment analyst, somebody who can go through the platform, be active in the private communities, whether Discord, Telegram, also potentially help with content, and yeah. So that's kind of one way to answer your question. And which platform should you be following in? I would say if you want to chat with community members, Discord Alpha Group seems to be the most active, but also the most, I guess, it's very hard to moderate when it's just going so fast. Then Telegram, I think, is more curated because you have different plan groups. You have VIP group, you have premium, advanced, and basic plan. So there's not as much. But all right, with that being said, thank you all so much. It's been a pleasure. Hope you all had a wonderful Thanksgiving. Happy Black Friday. And don't forget, we have the coupon, HBD40. That's HBD40 for 40% off of Tokenmetrics. You can buy that, or just buy the standalone product for TradingView, which is just $20 a month. Or if you buy it, actually, I'm sorry, $15 a month. If you go back here, right? So basically, this is Tokenmetrics. This is our pricing. You have the monthly, basic, advanced, and premium. But if you get yearly, it's cheaper. You get 2 months free, basically $200 a year. Plus, you can add the 40% off on top of this. So I would do this now before it expires. Then same thing with the TradingView. So if you come here, $15 a month, $150, plus the 40% off with the coupon code HBD40. That's HBD40. It stands for happy birthday, because it's our birthday again. All right. So with that being said, thank you everybody, and time to go watch those World Cup highlights. With that being said, take care. And as we like to say, the moon is not the limit to the moon and beyond. Thank you.